Equity trading. I'm Francine Lacqua in London, and here are your top stories. Live fire drills. China starts 3 days of military exercises around Taiwan in retaliation for Nancy Pelosi's visit. On the up, the Bank of England is set for its biggest hike in 27 years, and we're live on Threadneedle Street. Plus, a token boost, OPEC delivers one of the smallest production increases in its 6-decade history, rebuffing President Biden's calls to cool prices. Now, let's have a look at the futures, and we did see a rally in stocks that actually started in Asia. It's cooling off a little bit when you look at the futures. So this is as traders look at the Bank of England, so we'll see whether there's any kind of currency moves. UBS has a pretty bold call on sterling, but the main story here is, of course, one of earnings. We've had good earnings. We've had earnings that are concerning in terms of the future visibility of what they'll do. So as the markets open, and again, it would be a difference if you have a FTSE 100, which I think is moving and actually opening flat to the IBEX. The other big story, of course, is commodities. Yesterday, we had that really token increase for production. OPEC, maybe a political gesture. It won't really move the dial at all when it comes to the price of some of the oil. The Bloomberg US dollar index going ever higher, 1,272. S&P futures down 0.1%, and this is despite a bit of the boost that we got in the Chinese tech stocks and the Asian stocks as we wait for Alibaba. You can see crude there, 96.7. So this is also conversation on energy security, and of course a winter of discontent that we could see. Now, in the wake of U.S. House Speaker Nancy Pelosi's visit to Taiwan, China has begun military drills around the island. For all of the latest, Bloomberg's Jenny Mars joins us from Hong Kong. Jenny, what do we know so far? How aggressive are China being?
So China has begun the military drills at midday today, as it planned it would, in these 6 exclusion zones around Taiwan. This could last for 3 days. But, I think the fact that they've waited to start these drills until after Speaker Pelosi has left Taiwan just speaks to the fact that they're really not looking to start any kind of conflict here. On Wednesday, there were 22 planes that flew across the median line buffer zone, which separates China and Taiwan's airspace, though. That was a record going back to 2000 when we have the data. So they're trying to show this kind of defiant display of displeasure against Pelosi's visit, but they're also being careful of not going too far.
So, Jenny, do you think this is for a domestic audience, or is it, some kind of retaliation or a warning shot for the U.S. and Taiwan?
I think it's as much for Taiwan and the U.S. as it is for a domestic audience. If anything, the domestic audience was kind of clamoring for a more aggressive response to this. On Weibo and other platforms in China yesterday, netizens were sort of annoyed that China had let Pelosi come in and out of Taiwan with ease, really, after some sort of bellicose rhetoric in the state media kind of led them to expect more. So, yeah, they certainly need to be seen as being hard at home and also send a strong signal out to the US and Taiwan.
Jenny, thanks so much, as always, for your great insight. Bloomberg's Greater China editor, Jenny Marsh. Now, the other big story, of course, today is the Bank of England expected to push through the biggest interest rate hike in 27 years, despite growing risks of a UK recession. Let's get straight to our Lizzie Burden, who's outside the Bank of England. So, Lizzie, few economists see a quarter-point hike. Markets have pared back their bets of a half-point hike. So what could we get?
Well, Francine, I should say the majority of economists see a half-point hike, but there is this interesting minority seeing a quarter-point, including Morgan Stanley and Citi, and that's because they point to the recession risk. NISA, the National Institute for Economic and Social Research, has said the UK is already in a recession. And then on top of that, they point to the labour market data. Yes, the labour market is tight in the UK, but it seems like we're past peak tightness because people are coming back to the workforce because they need the money to deal with the cost of living crisis. On top of that, these economists point to the international picture. Yes, the ECB and the Fed have gone for jumbo hikes, but don't forget the Bank of England went first. So they take Andrew Bailey at his word when he said that 50 basis points may be on the table, but it's not locked in. Okay, that's the rate decision. Alongside that, we may also get an upgrade of the inflation forecast and the growth forecast, and we're expecting more details on quantitative tightening, because this is uncharted territory for the BOE.
Yeah, I was going to ask you about QT, which is probably the bit of the market that's most interesting to some of the pound traders. Like, how should we think about sequencing?
Well, Andrew Bailey's already said that they're going to have 50 to 100 billion pounds worth of QT in the first year, active and passive. So what we're waiting for are details on the pace and maturities. Are we going to go out of QE the same way we came into it in terms of maturities across the curve? But I'd point out a couple of ironies, Francine. First of all, the Bank of England paid above face value for these securities. So when it sells them or they mature, the Treasury is going to have to cover the BOE's losses. And really, it's turning a government cash cow into a drain on the public finances. And that's happening at the same time as the front runner for the next Prime Minister, Liz Truss, is saying she wants to cut taxes from day one. That's probably going to mean more borrowing, which means the Bank of England is going to be pulling levers in opposite directions at exactly the same time.
Yeah, so much, of course, going on. She also reiterated yesterday that she would change the mandate of the Bank of England. Thanks so much, our Lizzie Burden. They're outside the bank today. Now we'll bring you the latest rate decision at 12 p.m. UK time, and then Governor Andrew Bailey's press conference will start shortly after that. Don't miss our interview with the Bank of England Governor. That's at 4 p.m. UK time as well. Now let's get into some of the key market drivers with Ed Smith. He's co-chief investment officer at Rathbones. Ed, I mean, we could talk about the Bank of England for what, 3 hours and still have stuff to say about it. First of all, are gilts too low if the Bank of England goes 50 basis points?
Good morning, Francine. So what we've seen across the world is that 10-year government bond yields are really moving in lockstep with central bank surprises. So whether they're doing more or less than is baked into the interest rate futures. So I think if we had 50 basis points, that is widely expected, definitely the modal forecast, we wouldn't see too much of a change in gilt yields for now.
What does that mean for pound? So we had this UBS were really having a pretty bold and outlier call today, saying no matter what happens with interest rates today, the trajectory for pound is lower because of the big energy crisis we'll see in the winter.
Yeah, I mean, over the long run, which is the only time horizon we have any conviction in our currency calls because currencies are just too fickle and have too unsteady a relationship with other variables over the short term. Over the long run, we think the pound is undervalued. That's when we look at things like relative productivity, relative prices, relative savings in the economy. So on a sort of 5-year view, we think the trajectory is up. But it's really over the last 12 months, the exchange rate has been driven very clearly by interest rate expectations. Now, we have been saying for quite some time that we think the Bank of England isn't going to make the 2.75 to 3% peak in rates that is priced in to market. So that could mean that the near-term trajectory for the pound is down. But there have been a few developments in the economy. Your colleague Lizzie was discussing a moment ago that perhaps changes our view slightly, and perhaps the bank will make a few more rate hikes than we previously thought.
Yeah, so what would you buy right now in this environment, not only in the UK, but elsewhere? Go to cash.
Well, Our highest conviction call at the moment is definitely to overweight defensive stocks. And by that, I mean stocks whose earnings and relative price performance correlates negatively with leading economic indicators. And we think that's an all-weather trade at the moment, because whether or not a global recession is avoided, whether or not core inflation does fade back to target in the second half of next year, whether or not the Fed hikes by more or less than the current path set out by the market, we think defensive stocks will give you superior risk-adjusted returns, because they outperform when the economic second derivatives is negative, right? When growth is decelerating, when the LEIs are turning down. And I'm not a bear who thinks a proper recession is guaranteed. And I think a severe recession is unlikely, but given the backdrop and the lagged effects of policy, it's difficult to believe that economic momentum is going to accelerate again.
Okay, and Ed, I want to talk to you about treasuries in a second, but my morning must-read today is from John Authers, one of our favorites, well, my favorite, actually, a writer here at Bloomberg, and he has something called, where he has a piece out saying, "Are animal spirits running into a dumb money trap?" Are you expecting a correction? Is there too much still positivity, or are traders not willing to accept that we could see a pretty big and long protracted recession?
We think if the economy does fall into a recession, it will be a shallow one. So comparing market falls with what happened in 2008 is probably the wrong benchmark. But the risk of a recession, a proper recession, not just a couple of quarters of GDP for narrow reasons, is now about a 60% chance on our view. So for most of this year, we've been reminding clients that there are bullish arguments as well as bearish ones. But now we've had that rally, we're more inclined to emphasize some of the bearish arguments. We're staying defensive. Bad news has been priced as good news, but we think it's not too long before bad news is priced as bad news again.
Ed, I know you said that it's extremely difficult to make longer-term calls in currencies because of the volatility, but does dollar, how high can dollar go?
Yeah, I mean, I think it's conceivable that the dollar could go higher if we have a further more negative sentiment in risk markets, and the flight to safe havens continues. I think also perhaps the risks from persistently high core prices are at their most broad in the American market, which perhaps means that the risks to interest rates are perhaps furthest to the upside in American markets, and that could support the dollar too.
All right, we'll talk also about treasuries and the pretty dramatic moves that we saw this week. Ed Smith, Co-Chief Investment Officer at Rathbones, stays with us. Coming up, keeping up the fight on inflation. Fed speakers say cooling down price rises is their top priority. We'll have more on that story next. This is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
Federal Reserve, of course, raising interest rates by 75 basis points again.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Some financial markets are indicating that they expect us to cut interest rates next year. I don't want to say it's impossible, but it seems like that's a very unlikely scenario right now, given what I know about the underlying inflation dynamics. A more likely scenario is we would continue raising and then we would sit there.
Well, that was Minneapolis Fed President Neil Kashkari. Now, of course, the Fed voices singing the same monetary policy tune. Fighting inflation remains job number one, and rate hikes are not over yet. Ed Smith, Co-Chief Investment Officer at Rathbones, is still with us. Ed, thank you for sticking around, first of all, but what are markets misunderstanding in all of this?
So I think, look, we're trying to think probabilistically about the Fed at the moment. You know, there is certainly a risk that we get a classic policy mistake, a really sort of boring textbook recession that hits both growth and inflation, brings them both down. And we could see the Fed be forced to cut rates in that scenario. I think the Minneapolis president is being a bit too absolutist and not thinking in terms of the huge uncertainty, which means that we need to think probabilistically. But our base case is that the Fed gets to where markets are signaling it's going to get to at the moment, and then probably sit there for a little while. But it really depends on the speed with which consumption starts to deteriorate.
But Ed, sometimes it just also feels like there's a market interpretation, which could be animal spirits, or they want to see something, or they believe in a Fed put. Did you find some of the currency, some of the Treasury moves unsettling this week?
I mean, Treasury yields have been so volatile for the last couple of months. I think there is clearly difficulty in interpreting news for news flow for many Treasury investors, working out whether bad news is bad news or good news is bad news or bad news is good news. I think that's what's causing all this volatility, and we're just trying to sit tight, sort of recognize that there's a lot of uncertainty, a lot of volatility, think probabilistically, and that leads us to be pretty defensive at the moment.
Right. So you're not buying anything in terms of, or if you were to buy something in Treasuries, what part of the yield curve would you buy into?
I think we'd be inclined to keep it short. Look, we have got a meeting next week, an internal asset allocation meeting, where we are going to be debating probably more forcefully than we have done for a while, whether we should drop our long-standing underweight to longer duration bonds, particularly given risk-adjusted yields are now competitive with US equities, for example. What we prefer to governments at the moment, though, is short to medium dated credit. We sold some equities a couple of months ago, bought into short to medium dated credit just to lower the beta in our portfolio, if you like, and go into a place where we think offers a bit more of a valuation cushion.
Yeah, Ed, what do you do with China? Is there anything exposed to China or even in China that seems like a good value for investors now?
I mean, we've been pretty negative on China for a long time. We started that call in January 2021, which got a lot of pushback because it was pretty contrarian back then. Now it's pretty consensual, I guess. A lot of people, as you say, Francine, are thinking about, is there value to be had again. But, last week, we learned that the Politburo is effectively abandoning the official growth target. And that suggests that big policy easing isn't on the way. And that's problematic because China faces a big fiscal cliff in the second half of the year, right? And with the housing market still something of a falling knife, despite a lot of targeted support to that market, we're pretty nervous. The credit impulse has just about turned positive, which is usually when we think about buying for China and Asia Pacific equities more broadly. But it's really weak when you strip out infrastructure bonds and these headwinds in the second half of the year, plus the COVID tail risk. It's not for us right now.
All right, Ed, thank you so much for all of the insight. Ed Smith, their co-chief investment officer at Rathbones, joining us this morning. Coming up, Alibaba set to report its earnings later today as SoftBank moves to sell down its stake in the Chinese company. We'll have a full roundup of those stories. This is Bloomberg.
Earnings season is here.
At this point, anything in positive territory for Europe feels like a reach.
And it's recession obsession.
Bloomberg breaks the numbers first with exclusive expert analysis.
We've accrued higher than last year, reflecting the strong performance.
It's not about announcements, it's about execution, and I'm highly confident that we will deliver.
Bloomberg Television and Radio, the fastest numbers and analysis you trust.
Push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Welcome back to the Open, everyone. 21 minutes into the European trading day. And you can see we're holding on to some of the gains, strong gains. I would not call them that, but the DAX gaining some 0.6%. Again, some of the stocks gain did cool in Asia, but they were also pushed up by optimism when it came to tech stocks. The story is investors assessing corporate profits, the outlook and the forecast. And then, of course, they're also wagering on further Federal Reserve interest rate hikes supported, well, a lot of the havens, including Treasury yields. We're also getting a bit of breaking news now. We're looking at the story, frankly, hourly, if not minute by minute. In the last 2 minutes, Taiwan has said that China has launched missiles in the northeastern surrounding sea. Now, this is something that I think was pretty much expected, but if there is an escalation, of course, we'll bring you anything that comes from that. Some of the drills, some of the military drills that we were expecting, 3 days of this live fire military exercises around Taiwan in response to Nancy Pelosi's visit started a couple of hours ago. Taipei, though, playing down the impact on flights and shipping. Let's also get to some of the stocks on the move at the open. Now, we have 3 stocks for you. Let's start with Lufthansa. Lufthansa giving an upbeat outlook, as we all know it, because we've all had travel disruption as travel demand, they believe, losses stay strong into the winter months. Lufthansa getting some 6%. And Ambu, this is a stock that we don't look at very often. We probably should look at it a little bit more. It's a diagnostics company, basically healthcare, slashing full-year organic revenue forecast. They're also cutting jobs. And then Crédit Agricole, the investment bank, is driving earnings, and that beat estimates, gaining 3%. Now, ahead of Alibaba's earnings later today, the FT has reported that SoftBank has raised cash from selling its stake in the Chinese e-commerce giant. The paper says a Japanese investor has used derivatives that retain the possibility of holding onto the shares. For more on all of this, we're joined by Bloomberg's Catherine Lim from Singapore. Catherine, thank you for joining us. So can you give us an idea, first of all, of how bad these results could be for Alibaba?
Right. So we're talking about the April, May, June months, whereby April and May buying sentiment in China was badly affected by COVID flare-ups as well as Shanghai lockdowns in China. So we're going to see likely a sharpest decline in the commerce revenues for Alibaba and a continuation of a double-digit profit fall for the company.
So, Catherine, do you think the worst is over for the company's business in China? What could we find out?
Right. I think from what we have gathered on the ground, I think the sentiment has actually been improving since June, even though it is on a slow recovery. But I do think that the momentum is actually picking up. So we're looking forward to more guidance from the company, which will definitely be a good indicator, not just to consumer sentiment on the ground in China, but also business sentiment, because we're going to be on the lookout to see whether marketing dollars that businesses are willing to put into e-commerce platforms, for instance, is actually on the rise and on the mend post the lockdowns.
So how will an escalation in U.S.-China tensions actually affect Alibaba?
Right. We have seen some of the actions taken by Alibaba in addressing, for instance, the potential USD listing risk, and they are actively seeking to actually upgrade their secondary listing to a primary one in China in a bid to actually attract more China fund flows. So I do think that, when it comes to actually countering, we may actually be able to see some of the, flows coming in next year if all of these regulatory measures and corporate actions that they are taking materialize by the end of this year. And this can actually help lift some of the overhang.
Thank you so much, Catherine Lin there, of course, on the very latest from Alibaba, joining us from Singapore. Now, coming up, the Bank of England could be set to push through the biggest rate increase in 27 years, despite growing risks of a recession. We'll have a full roundup of what exactly we're expecting from the Bank of England. Venram having a wonderful 3 points of 3 things that traders should be watching from the Bank of England. First of all, of course, it's the size of the hike in the voting pattern. He says it's forecast. Even though the inflation is running above what they forecast, it will give us a sense of the pace of tightening needed. And then the third one, of course, is quantitative tightening. This is what European stocks are doing. They're gaining between 0.2 and 0.7%. This is Bloomberg.
700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Live fire drills. China starts 3 days of military exercises around Taiwan in retaliation for Nancy Pelosi's visit. On the up, the Bank of England is set for its biggest hike in 27 years. We're live on Threadneedle Street. Plus, a token boost, OPEC delivers one of the smallest production increases in its 6-decade history, rebuffing President Biden's calls to cool prices. Now, onto the markets. If you look at the markets, they're actually pretty much stable. Again, a lot of the focus from investors is trying to assess the corporate profit outlook, not only in Europe, but also what we're getting in the U.S. We're about, I think, 3/4 of the way through in terms of earnings season. We have mainly seen a lot of the big cap stocks being supported. The Crédit Agricole, for example, a little bit better than expected, so that's giving a bit of a lift to the CAC 40. The FTSE is a story not only of pound. We had some pretty bold and outlier call from UBS. I think our Valerie reminded us it was 115 by the fourth quarter. But the focus, of course, is all on the Bank of England. So let's also look at the sectors on the move. Yesterday, we did have travel and leisure up, and it's still one of the biggest gainers in today's trading session, gaining 1.2%. Retail also 1.8%. Energy, basic resources, and telecoms, some of the biggest losers. Now, the Bank of England today expected to push through this biggest interest rate hike in 27 years, despite growing risks of a UK recession. Let's get straight to Lizzie Burden, who's outside the Bank of England. Lizzie, a number of things that traders are wanting to find out, and it's not only about the hikes, but also it's QT and then the pace of what we could see over the next couple of quarters.
Exactly. So in terms of the rate decision, we're expecting a half-point hike, the biggest in the bank's independent history, and probably a 7-2 split with John Cunliffe and Silvana Tenreiro dissenting in favour of 25 basis points. On QT, Governor Andrew Bailey has already said we're going to have 50 to 100 billion pounds worth of QT in the first year, including active sales and letting gilts roll off the balance sheet. So we're expecting more detail on the pace of that, and also maturities across the curve. Are we going to go out of this the same way we came in?
So how should we look at quantitative tightening? I know one of the most difficult, of course, questions is how does quantitative tightening play in terms of financial conditions with the rate hikes?
Well, the Bank of England said that it doesn't want it to be the active tool, but it's really difficult to ignore. And don't forget that it's only the Bank of England who's doing this. You know, the bank has never done it before, but at the same time, the Fed isn't doing active sales. It's just letting government bonds roll off its balance sheet. So the bank is going to have to play it very, very carefully in terms of how it does it. But once we get more information today, it should set the conditions for the Monetary Policy Committee to vote on QT. And then we're expecting sales to start from the September meeting.
How will Governor Bailey, Lizzie, respond to these political pressures on the Bank of England?
Well, Francine, the old lady of Threadneedle Street has become an unlikely star in the Conservative leadership party drama. Liz Truss, the frontrunner to be the next Prime Minister, has been scathing about the BOE's record on fighting inflation. And not only that, she said that she would review the bank's mandate. I'd point out that the former BOE Governor, Mark Carney, also suggested reviewing the mandate, so perhaps it's not that radical. But if it comes up in the press conference, or indeed in the interviews post-press conference, I expect that Andrew Bailey will continue to defend the BOE's inflation-fighting record, as he has done so far. He said it's been an unprecedented crisis, they did the best they could with the data, and in terms of the mandate, he'll probably bat it off to the Treasury, who set the mandate. But I think that Simon French, the chief economist at Panmure Gordon, put it well. He said the Bank of England is politically independent, but it can't always be independent of politics.
Yeah, as we've seen with the Fed, I think at the time, President Trump had called Jay Powell the worst player and then the most increased value in play or something like that. Lizzie, thanks so much. Lizzie Burden there outside the Bank of England. Now, we'll bring you, of course, that BOE rate decision live at 12 p.m. UK time, and then Governor Andrew Bailey's press conference due shortly after that. Don't miss our interview with the Bank of the Bank of England chief. That's at 4 p.m. UK time. We're back, of course, talking about some of the markets and the three things that traders are watching from the Bank of England. Stefan Ball, Goldman Sachs chief UK economist, joins us now. Stefan, I guess, the size of the hike, the voting pattern, we're looking at the forecast, and QT. What do you think will be most interesting in all of this?
Yeah, I think there's three areas that we'll be looking at. I mean, the first is the vote split, as you were discussing. We're actually calling for a unanimous vote for 50, but I think there's a lot of uncertainty around that. We haven't heard from the more dovish members of the committee. I don't think they'd be thinking about voting for a hold. I think it is the choice between a 25 and a 50. And it is possible you get one or two dissenting for 25, but we think more likely than not, they'll all vote for a 50. The second is on the forward guidance, and do they keep the act forcefully language in order to keep a 50 basis point on the table for September? And then the third point is on QT. How much detail do we get? Do we actually get a precise number for the likely pace of active sales going forward?
So, Stefan, what do you think is the right way forward here? Because the complexity of the Bank of England is really not lost on anyone, not only because it's a small open market economy, not only because we're dealing with shortage, gas crisis coming in the winter, but of course, we're also looking at political turmoil.
Yeah, I think there's sort of two main factors in play. I mean, the first is wages and inflation is strong and quite sticky. Every time we sort of do a deep dive on the wage front, we find that, it's surprisingly how broad and how persistent these strong wage growths are. And then secondly, on activity. Now, a couple of weeks ago, things were looking quite a bit softer and we were talking about being on the edge of recession, but the last few weeks of data flows look quite strong. We now have small positive Q-on-Q growth for Q2, Q3, and Q4. We've reduced our recession probability from 45% to 35%. So all that suggests that a couple of 50 basis point hikes in the next two meetings seem appropriate and seem quite likely. And beyond that, we think they'll step down to a 25 bip pace for November and December, taking a terminal to 2.75.
Stefan, how difficult is it to see how much additional tightening the program will exert, QT basically will exert on top of the rate hikes?
Yeah, very difficult because we haven't done this before. We've come up with estimates. We've basically taken our estimates of what QE did and shaved them a little bit because it's unlikely to have large signaling effects and unlikely to have a large liquidity effect. And so we're calling for a pace of 15 billion a quarter of active sales. That's a total runoff of the balance sheet of about 95 billion over the first year. And we think that translates to about 15 basis points of rate hike equivalent. So, a bit more than a basis point a month substitutability with rate hikes. So some tightening, but on a quarter-on-quarter basis, you aren't substituting for a 25 bip hike or anything like that.
Yeah, and we just have some great charts. So thank you to Valerie, putting a lot of these charts together. This one is, of course, looking at QT. Stefan, okay, your call first of all on gilts, but then sterling. I mean, we have this outlier call from UBS, 115 in the fourth quarter. What do you do with pound right now?
Yes, I think it's an important thing to keep watching for the BOE, small open economy, and we've seen Catherine Mann talk about sterling moves more than Bank of England officials tend to. Now, she talked about the bank almost needing to move 1 for 1 with Fed moves in order to guard against sterling falls and importing more inflation. We don't think that. We do see some downside risks to sterling, and I think that given we're looking like we're getting towards double-digit inflation, I think that is a concern for the Bank of England as an inflation-targeting central bank, and it is one to watch.
Yeah. Do you think gilt yields are too low at the moment?
No, we still see a lot of room for hikes. We see neutral at 1.75. So the hike today, if it is 50 basis points, takes us to neutral, and we think that bank needs to go into contractionary territory in order to tighten monetary policy, and we have terminal at 2.75, so that a whole percentage point above neutral in order to bring inflation back down to target.
All right, Stefan, thank you so much. As always, Stefan Ball there, Goldman Sachs chief UK economist. Now let's get straight to the Bloomberg. First word news, here's Laura Wright. Hi, Laura.
Hi, Francine. OPEC Plus will raise output by a token 100,000 barrels a day in September in one of the smallest hikes in the oil producer group's history. It comes as a blow for Joe Biden after the US president's visit to Saudi Arabia last month. OPEC members said spare capacity is severely limited and the excess should only be used to respond to major supply disruptions. The US Senate has voted by 95-1 to ratify Sweden and Finland's applications to join NATO, a move aimed at bolstering the alliance after Russia's invasion of Ukraine. If the accession wins approval from all current NATO members, the two countries will join Estonia and Latvia as NATO members bordering Russia. Diplomats from the US, Europe and Iran are set to return to Vienna for another attempt to save their nuclear deal. The US Special Envoy for Iran says he will discuss a European proposal to rescue the 2015 agreement. The accord collapsed after Washington withdrew 4 years ago and reimposed sanctions on Iran, prompting Tehran to ramp up its enrichment program. A group of professional golfers, including Phil Mickelson, are suing the PGA Tour, calling it an illegal monopoly. They claim it's hurting their careers by suspending them for joining the Saudi-financed LIV Tour. The players say that's part of the PGA's plan to thwart the rival tour. The PGA counters that the lawsuit is a bid by the golfers to free ride on its platform. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thanks so much. Laura Wright in London. Coming up, China kicked off military drills around Taiwan in the early hours of this morning after Nancy Pelosi's historic visit to Taiwan. We get the latest on that next, and this is Bloomberg.
Have been very popular. And if a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. I would characterize us as crypto learners. We have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Welcome back to The Open, everyone. 44 minutes into the European trading day. This is a picture across the board. We're seeing a bit of a reversal for the FTSE 100. Nothing huge, but we were seeing gains earlier, now down 0.1%. Overall, European stocks gaining 0.3%. Investors not only assessing the inflation picture, what it means for Fed hikes, but also corporate profits. Now, in the wake of U.S. House Speaker Nancy Pelosi's visit to Taiwan, China has begun military drills around the island. However, Bob McNally, founder and president of Rapidan Energy Group, says he sees a low chance of conflict between the U.S. and China.
We only have about a 5 to 10% risk max that the Chinese and the U.S. will come to blows militarily. And if it happened, it would probably be inadvertent. We don't think Beijing or Washington want to have a military conflict here, any kind of an incident. So I think they'll be huffing, they'll be puffing, there'll be brinkmanship, but I think they're going to steer clear of crossing red lines.
Well, joining us now to talk about foreign policy and, of course, this huge concern surrounding Taiwan Strait is Diana Shoileva, chief economist at Inodo Economics. Diana, thank you for joining us. First of all, what was the week that we've seen? Did it make sense for Nancy Pelosi to show up in Taiwan at this specific time, or was it a policy mistake?
I mean, look, it's almost useless to speculate why she decided to do it against the advice of the White House and the Pentagon. And actually, as it has been suggested, against sort of Taiwan's quiet push against the visit. Now that the visit has happened, I think what we need to think about is what does this mean going forward for Taiwan and for Sino-US relations? And unfortunately, markets, even though they don't seem to have realized yet, have woken up to a much more dangerous new normal.
What is the new normal that we could see, Diana? So how does there's a school of thought, one of them saying, like, look, this will force the U.S. and China back at the table. So we're going to see something either worse or bad, but certainly, the status quo is now challenged. And the other one saying that the economic ties will just deteriorate from here no matter what.
Well, the way we have seen things for the past 4 years, during which we've coined the great decoupling thesis that the world is bifurcating into two spheres of influence, a Chinese and an American one, is unfolding just as expected. This is an all-encompassing geopolitical confrontation between the aspiring hegemon China and the existing hegemon the US. The existence of Taiwan makes the likelihood of this confrontation contest to turn kinetic, to involve military blows, much higher than it would have otherwise done. So both countries around the world and multinationals and other global companies have to realize that whether they like it or not, they will be forced, they will have to start picking a side. And we already see the economic repercussions in terms of the redistribution, rejigging, changing of global supply chains.
But Diana, overall, what does this mean for example, some of the support? We saw also China for the first time really abandon some of the targets and saying like this was not a hard target in terms of economic growth. What are you expecting in terms of support? Could we see a China that grows significantly less without that stimulus that many were expecting?
Look, Xi Jinping has reframed the way Chinese economic policy works in the context of the first goal being maintaining national security. And China is no longer interested in growing at all costs. It's interested in quality development. However, whether it will be able to achieve this very difficult transformation remains an open question. And in the process of doing so, it is going pretty much ex-growth. So China's economic development has changed dramatically, and going forward, it's unrealistic to expect them to post strong growth rates or be able to pull the global economy out of the doldrums when it falls in.
Yeah, thank you so much for all of that insight. Diana Shoileva, their chief economist at Enodo Economics. We'll have plenty more, of course, on China, Taiwan, and the U.S. Now, coming up, OPEC Plus promises a small increase in crude output. So how is that going to go down with Washington? Well, we'll discuss that next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 52 minutes into the European trading day. We're holding on to gains, maybe a bit of fluctuation for the FTSE 100. It is a big day for the UK because of the Bank of England. It's kind of fluctuating between losses and gains, but really pretty much unchanged. Stocks holding to some of the modest gains that we're seeing. Again, corporate profit outlook weighing on investor mind as our Federal Reserve hikes. Now let's take a look at some of the events we're following today. Of course, 12 p.m. UK time. we'll have the Bank of England's rate decision. Economists are predicting a 50 basis point increase to 1.75%. That's the biggest move in 27 years. Now, that's followed by U.S. initial jobless claims and the latest trade balance data. Then at 5 p.m. UK time, the Fed's Loretta Mester due to discuss the U.S. economy and monetary policy at an event in Pittsburgh. And finally, Tesla hosts its annual meeting with Chief Executive Elon Musk, likely to face questions on litigation surrounding his canceled Twitter takeover. Now on to other news, and oil prices plunged to their lowest close in almost 6 months yesterday. That's as investors weighed a tiny supply increase from OPEC Plus against weaker U.S. gasoline demand. Adding just 100,000 barrels a day, the alliance warned of severely limited spare capacity, while President Biden's visit to Saudi Arabia last month has yielded little, but the White House is still urging oil producers to boost output. Joining us now is Bloomberg's Paul Wallace, covering Middle East energy and commodities. Paul, so look, thank you so much for joining us. I guess it was better than nothing, right? How badly do you think the OPEC Plus's decision will go down in the U.S.?
Hi, Francine. Yes, that is how the American government is portraying it. It's better than nothing. Their argument was that OPEC Plus, before their diplomatic efforts, was set to increase production by nothing over the rest of the year. So they say this is something. They also say they don't really care about the added barrels from OPEC Plus. They're much more interested in the price of oil. And Amos Hochstein, the White House's special envoy for energy, says that since his and other officials have really put pressure on OPEC to raise production, oil prices have come down quite a lot, and pump prices in the U.S. have certainly come down almost to $4 a gallon. So they're still high, but they're lower.
But so, Paul, is this like an intent? Is this like a message or warning shot saying, guys, we could increase, we're taking this seriously? Or did they do such a small increase because they just don't have the spare capacity?
I think it's a combination of two things. I think it's fair for OPEC Plus to argue that there are signals of demand weakening in major economies such as Europe and the US. And as you said at the beginning of the segment, oil actually fell heavily yesterday. It was down about 4%, and it's down a bit more even today. Brent's well below $100 a barrel now, and WTI is on the brink of $90 a barrel, a level it's not hit since early February, since, a few weeks before Russia's invasion of Ukraine. And that is down to signals that US Americans are driving this. So that's pretty significant. But it is also the case that OPEC Plus is almost maxed out when it comes to supply. If you look at the group, it's pretty much only the UAE and Saudi Arabia that have significant spare capacity.
So what can we expect from next month's OPEC Plus meeting scheduled for September the 5th? I mean, I feel like every 2 weeks there's an OPEC Plus meeting.
Yes, I mean, these monthly meetings can be quite exhausting. I mean, as OPEC Plus says, it will look at the data at the time and decide what to do then. I think it's unlikely that we'd see any particularly aggressive move from them in terms of hiking supply, simply because they can't do it. Although the Saudis say they've got about 1 million barrels a day of spare production capacity, and the UAE says the same, that's untested. They're almost at, well, at least in the case of Saudi Arabia, they're pretty much at their highest levels historically, and other members of the cartel clearly can't go much higher. But we could see another modest hike, let's say another 100,000 barrels a day of increase at the next meeting.
Paul, thanks so much. As always, Paul Wallace there, covering Middle East energy and commodities for us. Now, that's it for the European Market Open. Surveillance Early Edition is up next. We'll look at oil. We'll, of course, look at gilts in light of the Bank of England decision a little bit later. This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, of the US, Europe and the UK, have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Everything, let's say, up to a 50% gas shortage can be relatively easily compensated and mitigated.
We are here, we are ready to lend, we are ready to arrange bond issuances for them, and this is the main driver of our activities.
We don't think Beijing or Washington want to have a military conflict here, any kind of an incident.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Live fire drills. China starts 3 days of military exercises around Taiwan in retaliation for Nancy Pelosi's visit. On the up, the Bank of England is set for its biggest hike in 27 years, and we're live on Threadneedle Street. Plus, a token boost, OPEC delivers one of the smallest production increases in its 6-decade history, rebuffing President Biden's calls to cool prices. Well, good morning, everyone. This is what the markets are doing now. The focus firmly on some of the earnings that we had. Now, there is a little bit of bifurcation, for example, compared to value versus defensive. The other thing we're watching out for, and this is daily occurrences, of course, the Fed, some of the inflation expectations. There was, I know, concern about the ISM number yesterday and what this means for future rate hikes. European stocks getting some 0.4%, supported at the margin by technology. We're also getting Alibaba a bit later on. Dollar, the big, of course, one we're watching out for. Currencies in general, I would say, is probably the one that will bring us the most angst, depending on what side of the trade you're on, given that we have the Bank of England and we have that call from UBS, 115 in the fourth quarter, because they really see a lot of pressure in terms of gas and this gas energy cost of living crisis in the UK. If you look at Europe and the difference, for example, between a CAC 40, where we heard from Crédit Agricole, they're coming up with some better than expected news. So the CAC 40 gaining some 0.5%, the DAX 0.8% higher. We did also have encouraging news from some Lufthansa, for example, gaining, I think, 6.7%, saying that this demand for travel will continue. So a couple of the corporates are supporting some of them. And then you can see the FTSE pretty much flat here in the UK, that Bank of England decision a bit later on. Now, they're expected to push through today the biggest interest rate hike in 27 years, despite growing risks of a UK recession. Let's get straight to Lizzie Burden, who's outside the Bank of England. Lizzie, 50 basis points would be the biggest hike in the independent history of the Bank of England. Why now?
Well, Francine, inflation's at a new 40-year high in the UK, and we haven't even reached the peak yet. The Resolution Foundation think tank actually says that inflation is going to peak higher and last longer in the UK. And so today you may see the Bank of England adjusting its forecast for inflation as well as growth. You've also still got a tight labour market here. So really combining the worst of all worlds, the labour market tightness of the US and the energy supply shock of Europe. And don't forget, the ECB and the Fed have already gone for jumbo hikes. So if the Bank of England follows suit, it would be the biggest not only in 27 years, but the biggest in the bank's independent history.
Yeah, and the other thing, of course, that traders want to know is quantitative tightening, right? Because the policy committee, we know, kind of studied a roadmap for starting the sale of these gilts that the BOE has accumulated for a long time. What could go wrong, Lizzie, in all of this?
Well, lots, Francine, and it's up to the Bank of England to tread carefully. Andrew Bailey's already said that they're going to have 50 to 100 billion pounds of gilts either rolling off the balance sheet or being actively sold in the first year. Goldman Sachs strategists say that equates to about 15 basis points of hikes, which is really hard to ignore, even if the Bank of England says that it's not the active tool. What we're expecting today is more detail on the pace and the maturities. Are we going to come out of QE in the same way that we went into it in terms of maturities across the curve? But really, this is uncharted territory for the BOE and for any central bank around the world, because remember, even the Fed isn't actively selling its government bond holdings, but really Andrew Bailey has made it his mission to get rid of them.
Yeah, and I guess, you know, the other concern, Lizzie, is that they're in political turmoil, and we have Liz Truss, #1 in the polls to take over the Conservative Party and become Prime Minister, also wanting to change the bank's mandate.
Yes, it's difficult for the BOE on two fronts. First of all, Liz Truss has been extremely critical of the bank's record on fighting inflation, and she said that she potentially wants to review the bank's mandate. And secondly, she has said that she's going to start cutting taxes from day one. Economists are warning that that will be inflationary and it will mean even more interest rate rises. But it's difficult for the BOE because it can't start pricing in these fiscal moves until it's actual policy, which takes away from the bank's forecasts because even though it's highly likely that Liz Truss will be the next Prime Minister, officially there's not much the BOE can do about it yet.
Lizzie, thank you so much. Our Lizzie Burden there outside the Bank of England. Now we'll bring you, of course, that rate decision live at 12 p.m. UK time. Governor Andrew Bailey's press conference due half an hour after that, and then don't miss our interview with Mr. Bailey, Governor of the Bank of England, 4 p.m. UK time. Now, in the wake of U.S. House Speaker Nancy Pelosi's visit to Taiwan, China has begun military drills around the island. Joining us now is Bloomberg's Bruce Einhorn in Hong Kong. Bruce, first of all, good morning. I know we need to be like a military expert, given all the news headlines, to understand exactly what's going on. But the market is not freaked out by what happened. So was it expected?
Yes. So what we know so far is that the Taiwanese government said that the missiles began firing at shortly before 2 o'clock this afternoon. China has confirmed that the exercises have begun. These are in 6 different zones all around the island. So this is by far the largest such exercise that China has done. The concern is that some of these zones go up against or even encroach into waters that Taiwan says are theirs. So it does raise the possibility of possible miscalculations that could lead to problems.
But what, a miscalculation like a target not hit, Bruce? What are we actually talking about?
Well, when you have live fire exercises, that's the concern, right? Things can happen, right? So the expectation is that there won't be any serious escalation here. But of course, you know, there always is a possibility. So the Taiwanese have said that they expect this to go on for a couple of days, and they expect everything to calm down by the weekend, by Sunday.
Bruce, who are these exercises for? So is this President Xi needing to look tough back home in mainland China, or is it really a warning for the U.S. and Taiwan?
I think it's probably all three. So yes, you're right that Xi Jinping is in a delicate situation at the moment because there's the Party Congress coming up in which he's expected to get his unprecedented third term. Appearing weak at a time like this is not good for Xi Jinping. So this is a way for him to show that China is not intimidated by the U.S. Of course, it is a message to the U.S. It's a message to Taiwan. The U.S. is maybe getting a message in a different way. In Congress right now, there's a bipartisan bill that's co-sponsored by Senator Bob Menendez, chairman of the Foreign Relations Committee, and by Lindsey Graham, both of whom went to Taiwan in the fall. And they're pushing this bill that would upgrade Taiwan's status as a major non-NATO ally, something that the Biden administration is trying to slow down at the moment. But it does show that there really is strong support in the U.S. Congress for Taiwan.
Okay, Bruce, thank you so much. As always, we'll have plenty more, of course, from Bruce Einhorn throughout the day. One of the other big question that Valerie, our Queen of Charts, put together is, of course, who feels weaker after this? So we'll try and explore that angle as well. Coming up, we'll discuss inflation and growth ahead of that BOE decision with Paul Donovan, Global Chief Economist at UBS. This is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
Big Tech reports earnings.
Another big day. Apple, Amazon crushing it.
Bloomberg brings you the headlines first.
Revenue growth falling for the first time.
Missed on every top and bottom line metric apart from one.
This really is a story of strength.
Plus, expert analysis to keep you informed.
We've been waiting for this.
The fact that they are not profitable is concerning.
Is this a company that indicates maybe a recession is coming?
We think it's going to be a major bounce back coming in next year.
Nobody covers tech earnings like Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now joining us to talk about everything, the U.S., the Fed, Treasuries, and of course the Bank of England, is Paul Donovan. He's Global Chief Economist at UBS. Paul, thank you for joining us. First of all, the Bank of England, there's a lot going on because we're also waiting on the new Prime Minister. We don't know whether taxes will go down or not. We don't know how inflationary that is. So what kind of nightmare is the Bank of England governor looking through to decide what he does today?
We'd say it's a really, really difficult situation because, of course, huge swathes of the UK inflation story, something that Bank of England Governor Bailey can do nothing about. The increase in home heating bills that's going to come through from October, he's got no control over that. The government has control over that. Bank of England governor's got absolutely nothing to do with that. And so, again, as with other central banks, Bailey is trying to create disinflation and deflation where he's got control to offset the inflation where he's got absolutely no control. The problem is the inflation forces where he's got no control because of the perverse way the UK sets energy prices are actually quite significant. And then, yes, there is the chaos of politics. The Foreign Secretary Truss, who is a candidate to lead the Conservative Party, become Prime Minister, has basically a plan to raise inflation. That is her policy. She is going to be throwing stimulus at an economy that is already experiencing quite high inflation. So that, again, is also troubling. I think in defense of the Bank of England and what they've been doing... Sorry.
Yeah. Well, no, I mean QT...
Bailey has not given forward guidance. The good thing about that is that he can't tear up the forward guidance, which is what we've seen with the Fed and with the ECB. So I think there'll be less damage to credibility from Bailey honestly coming out and saying, look, we don't know what the future holds, so we're going to play it by ear. We're not giving you forward guidance.
Yeah, how difficult is it to understand how much additional tightening QT, will exert on top of the rate hike? And is this the crux of it all? If we don't exactly know what we're dealing with, then there could be a real policy mistake.
There is a risk of a policy mistake, although I think that's more likely to come from the government than it is from the Bank of England at this stage. The Bank of England could then compound a government policy mistake. I think that's perfectly fair by having the wrong policy going in and all of a sudden there's a new fiscal direction suddenly being announced from the next administration in the UK. The quantitative tightening that we're seeing, that the reversal of quantitative policy is perhaps not quite so potent in the UK as it is in the United States because of things like the mortgage structure, the prevalence of the equity market in the UK rather than bond financing, which is more common on the continent. So the interest rate, I think, is probably more likely to be the focus.
Yeah, how much weaker will pound be and how much of a headache could that be? Does that help actually with exports, or it just makes everything more complicated?
Well, frankly, at this stage, it's not really going to be that great a help because, of course, as I was saying earlier on, there's swathes of the inflation rate the Bank of England's got no control over, and unfortunately, a lot of those are imported prices. So it's the domestically generated prices the bank's got control over. The import prices, it just has to sit there and take it. And so as we see sterling weakening, that adds to the sterling cost of gasoline, of diesel. It adds to the sterling cost of imported agricultural commodities, and that then adds to the inflation rate. So yes, it is potentially a benefit to exporters, though exporters face other challenges, but it's an inflation impulse because so much of the inflation story is focused on commodities. If this was a manufactured goods inflation story, we wouldn't necessarily be so worried about the weakness of sterling, but because it's commodity based, that's problematic.
Yeah. Paul, talk to me a little bit about treasuries. I mean, we had some pretty exciting swings this week. What was underlying those?
Well, I think essentially, we're back to the problem that the policy errors the Fed made in June, when it tore up forward guidance and started babbling on madly about consumer price inflation. The consequence of that is the markets really don't know what to do. And so somebody comes out and gives a rousing speech and we're going to contemplate 50 to 75 basis points. And the market thinks, oh, right, we might be seeing a bigger hike. And then the market pauses and thinks, well, yes, but do we actually believe a word the Fed says when they spent 10 weeks telling us they're going to do one thing and then did something completely different? So the fact that the Fed, I think, has quite seriously undermined its credibility with any kind of pronouncement about where policy is going, that's adding to the uncertainty. And then just generally, and this is a global phenomenon, we're in this really, really weird economic environment where on the one hand, the labour market is very strong, it's got very low unemployment rates everywhere. On the other hand, the labour market's extraordinarily weak because pay bargaining in real terms is basically nowhere. And you've got very, very negative real wage or real salary growth. And so the market's sort of running backwards and forwards between these two scenarios, rather like an overexcited puppy, doesn't know what to do, doesn't know where to go, and it's creating the volatility that we're seeing today.
All right, Paul, and I know you had some pretty also heated conversation about whether we're in a recession or not, but that's time for another day. I don't want to get your blood pressure up on Thursday, Bank of England, so we'll have to get you back to talk about a possible global recession. Paul Donovan, Global Chief Economist at UBS. Coming up, Lufthansa gives an upbeat outlook. Europe's biggest airline says profit will keep rising in the coming months amid booming demand. This is Bloomberg.
much of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition of Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. China's military has fired missiles into the sea during exercises around the island of Taiwan in response to U.S. House Speaker Nancy Pelosi's visit. Earlier, Southeast Asian foreign ministers issued a statement urging maximum restraint in the region. The communique, which did not name China or the U.S., expressed concern that developments could destabilize the region and eventually lead to miscalculation or serious confrontation. Now, the U.S. Senate has voted by 95-1 to ratify Sweden and Finland's applications to join NATO, a move aimed at bolstering the alliance after Russia's invasion of Ukraine. If the accession wins approval from all current NATO members, the two countries will join Estonia and Latvia as NATO members bordering Russia. And diplomats from the U.S., Europe and Iran are set to return to Vienna for another attempt to save their nuclear deal. U.S. Special Envoy for Iran, Robert Mallet, says they will discuss a European proposal to rescue the 2015 agreement. The accord collapsed after Washington withdrew 4 years ago and reimposed sanctions on Iran, prompting Tehran to ramp up its enrichment program. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now, Europe's biggest airline, well, Lufthansa, has forecast that profit will keep rising in the coming months amid a boom in demand. Now, that's despite staffing shortages causing airports to limit capacity. Now, for more, we're joined by Bloomberg's aviation expert. He's Sid Phillip. I messaged Sid and saying, like, I'm going to City Airport. Is it 2 hours, 3 hours? And you've told me that City is the best airport in London right now. So there you go. This is like the inside story. But let's get back to Lufthansa. So, look, they're doing pretty well. The outlook is also pretty strong. Is this the kind of pattern we'll see from most airlines?
Yeah, so, I mean, at the moment, despite the fact that there's chaos with consumers, airlines are actually making hay because pricing is going through the roof. And so pricing is really key. And Lufthansa is talking about a significant increase in third quarter results. And that's back on high pricing as well as the fact that they have high cargo prices.
I mean, what I find incredible is actually, despite the travel disruptions, you lose your baggage, like people are still willing to spend like £600 to go to Greece or things like crazy things like that.
Absolutely. I mean, so people have not had a holiday in over 2 years, and people are really sort of desperate to get out. And this summer has seen all that pent-up demand really translating into people flying, and that's really sort of messed up the entire sort of airport system, but it's also been really good for the airlines in terms of profitability.
Yeah, and Lufthansa was so bullish actually going forward, but at some point, does inflation start biting?
It is sort of looks to be seen as to what happens in the winter, because winter is typically the slower month for the airline industry, and typically bookings are slow. So we're looking to see what really happens. But Lufthansa is still bullish. They're talking about over 500 million euros in EBIT profit at full year. So, I mean, they are pretty confident about demand sort of holding and carrying through.
So give me a lowdown of like some of the others. I know you follow Ryanair, EasyJet. Like who has the most disruptions? Who's doing okay in terms of booking?
It's really hard to say because every day is different. Airports different. I mean, Heathrow's put in a cap of 100,000 daily passengers. That's affected BA because they're the biggest airline from Heathrow. We've also seen EasyJet cancel a last amount of their schedule. We've seen Wizz Air bring down schedules. So Ryanair is actually doing really well at the moment. They've been sort of least affected by the cancellations, and that's partly because they've held on to staff during the pandemic. So it hasn't been as hard for them to sort of hire back people and actually sort of restart operations.
But so is that, does it help? I mean, sometimes, we used to joke that you got like, I don't know, a Ryanair flight to Budapest and then it was like in a neighboring country. Does it help in these travel disruptions?
Absolutely, it does. And so Ryanair has, because of the fact that one, they handle their own ground handling and check-in services at some of their biggest airports, as well as the fact that they're actually sort of in smaller airports in the rest of Europe. That does help them because the congestion and all of that is not as prevalent in those airports as it is in some of the bigger hubs like Heathrow, Schiphol, and others.
Okay, I love our travel update, but things are looking better, right, Sid?
Things are looking better.
Are they? All right, Sid Phillips said it, so if you have travel disruption, you can write into sid.phillip@bloomberg.net. Joining us, of course, to talk, I'm kidding, don't write to him about that. We're talking about Lufthansa. Coming up, Europe's energy crunch is becoming more acute. Can nuclear power actually help plug the gaps? Not if France is anything to go by. That's coming up next, and this is Bloomberg.
Cryptocurrencies have been very popular. And if a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. I would characterize us as crypto learners. We have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
Federal Reserve, of course, raising interest rates by 75 basis points again.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg. How however you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back. Bloomberg Surveillance Early Edition. Here are your top stories. Live fire drills. China starts 3 days of military exercises around Taiwan in retaliation for Nancy Pelosi's visit. On the up, the Bank of England is set for its biggest hike in 27 years. We're live on Threadneedle Street. Plus, a token boost. OPEC delivers one of the smallest production increases in its 6-decade history, rebuffing President Biden's calls to cool prices. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, oil prices plunged to their lowest close in almost 6 months yesterday. That's as investors weighed a tiny supply increase from OPEC Plus against weaker U.S. gasoline demand. Adding just 100,000 barrels a day, the alliance warned of severely limited spare capacity. Well, President Biden's visit to Saudi Arabia last month has yielded little, but the White House is still urging oil producers to boost output.
We have the decision today to continue increases that, quite frankly, were supposed to go to zero. And we'll see at the meeting next month where the market is and what OPEC does then. And we will continue to have the same message, whether it's a sovereign or if it's a private company. This is the time, if you have the capacity, to invest in it and to be able to make sure that the global economy has what it needs to continue to grow. Because if it doesn't, both the sovereigns and the private companies will suffer the consequences as well, and most importantly, the American people will. And that's not what we want to see.
Now, joining us to talk about oil and, of course, the oil prices, Julian Lee. Julian, first of all, you want to bet. You came on set yesterday, and I said, you know, are they going to increase? And you said they'll increase by like this much, which is exactly what they did. Who was that for? Was it to keep the U.S. on side, or are they going to get slapped down by the U.S.?
I don't think they're going to get slapped down by the US. I mean, I think Amos Hochstein's comments yesterday show that the US is trying to put a positive spin on this. There was an increase. It wasn't as much as many people had hoped that it would be. But, you know, it's better than nothing, marginally. Yep. And the hope is that these increases might continue through the autumn. What I think this does say is that two things really stuck out for me. One is that collectively the organization has very little spare capacity, and there was probably very much, not very much more that it could add while still holding something in reserve in case there are problems with supply, whether that's Russia or anywhere else. The second thing is they mentioned the need for consensus.
Yeah, but is it so? Could they have done more? I mean, yesterday we were also talking about the fact that they didn't just have much spare capacity. So could they only increase it by this much because there wasn't much else they could do?
They could have done more. The problem is that the more they do now, the less they have in reserve for the future. I think they're worried still about the potential impact of sanctions on Russian production. There are a number of countries within the group that are struggling anyway. Libya's production has come back from the lows that it was at a month ago, but they could easily fall back again. There's a degree of political unrest in Iraq. There are lots of areas within the OPEC Plus group and within oil producers globally where there is cause for concern. We've become very used over the last 3 decades to OPEC having very large amounts of spare capacity. You know, 4, 5, 6 million barrels a day. That's gone. We've got an organization really that has 2 million barrels a day of spare capacity at most. And if sanctions are imposed on Russian exports and they are effective in shutting them off, the loss is going to be bigger than that.
Julian, give me a sense of how long the oil market tightness lasts for. So we have so many questions about whether we will see a recession where demand will be dented, especially in China. So do we have a clearer picture by September, October?
We may have a clearer picture. I mean, there are so many times that I've heard OPEC ministers and others saying, oh, well, we've put off making a decision now because the outlook will be clearer when we meet next time. And of course, it isn't, because everything's moved on, and the horizon that you're trying to forecast has moved on as well. I think the only way that we'll have greater clarity in a month's time is if recession has really hit and there are, very clear signs of things slowing down. If there aren't by then that threat, I think, still remains, and the uncertainty remains too.
What's the most interesting thing that you would want to know right now? Is it, China demand, or is it demand from the U.S.?
I think it's both, actually. I think it's demand from the US. We're seeing some evidence of that being much slower than people had anticipated. I mean, even with the recent drop in gasoline prices, gasoline use last week on a 4-week average basis was below the level for the same time in 2020. That's significant. I mean, that's slower than pandemic year oil demand, or gasoline demand anyway. And yes, China is a huge uncertainty.
Julian, thank you so much. As always, our oil analyst there, Julian Lee from Bloomberg. Now, scorching temperatures are adding to Europe's energy crisis. France says it will likely extend pauses to its nuclear generation capacity. Now, this comes as high river temperatures continue to make it difficult to also cool down the reactors. Well, joining us now is Bloomberg's Rachel Morrison. Rachel, thank you so much for joining us. First of all, could France be more at risk than Germany, which has such links with Russia, actually, over the winter months?
Yes, when we're looking at power prices, we see France really sticking out as having the highest prices across Europe. So that's telling you that people are seeing there's a real risk there that supplies could fall short. EDF has had all kinds of troubles with its nuclear fleet, and these river temperatures mean that there are even more reactors that have to limit output because of the high temperatures.
So why? I mean, first of all, France is not doing great. There's a mustard shortage, and now they have high energy prices, oh la la.
Yes, and it looks like in the winter the prices are even higher. So France normally exports a lot of power, and if they're not doing that, that has an impact, a knock-on impact for everybody around, for the UK, for Germany, for Spain, pushing the prices up everywhere. And what we may see in winter is those cables that connect the countries come under a bit of political pressure.
So they nationalized EDF, which was a huge move, and I'm sure a lot of the neighboring countries are at least studying whether they can do the same. How much does that help?
It doesn't help that much in terms of fixing the problems that already exist or cooling the rivers. But what it may do is turn France a bit more inward looking. It may affect those interconnectors, the cables that connect the different countries, but it's not really going to help. I mean, EDF, the problems go beyond just who owns the company.
So Germany's Rhine River levels are also worrying low. How is this adding to concerns in Germany?
Yes, essentially the Rhine is at levels where it's about to close. So along there, all kinds of things are transported along the Rhine, including coal supplies. So Uniper has warned that one of its stations, they may have to limit output at that station because they are running down stocks of coal that they keep there. So what was interesting about that is that they said it was likely to last for weeks, so into September. And at that point, we're right up against the winter season when we really want to see all the stations having as much coal as possible ahead of needing it when it gets cold.
I mean, it's it almost feels like a perfect storm. Germany is also expected to close its last nuclear plants soon.
Yes, the rhetoric on that is changing a little bit. We had the Chancellor yesterday mentioning that it could be a good idea to keep these stations online. But the problem is that the companies need to know. So there's 3 that are all due to close at the end of the year. If they are going to stay open, they need more fuel, they need to do extra maintenance, they need to make sure they have staff. So pressure is really coming on Germany to decide what to do and whether to do a U-turn on that nuclear phase-out.
All right, so really interesting. I know we'll get back to you throughout the day and, of course, throughout the week with the very latest on this energy price and the energy dynamics that we're seeing there. Rachel Morrison from our Bloomberg team. Now, coming up, can augmented reality let clinicians scrub in anywhere in the world? We'll talk to the Proximi Chief Executive Officer, Nadine Hashash Haram. That's coming up next, and this is Bloomberg.
the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Glencore is to return an additional $4.45 billion to shareholders in dividends and share buybacks after first half profit more than doubled to a record. Glencore, the world's top coal shipper, has been one of the biggest winners from the global energy crunch as demand for the fossil fuel surges. First half core profit came in at $18.9 billion, with coal earnings making up just over half of that. Now, Novo Nordisk shares have slumped after sales of a key obesity drug did miss expectations. The company, which holds more than 2/3 of the global branded obesity prescription drug market, has been battling production issues with its Wegovy treatment. A contract manufacturer stopped production in December due to quality concerns. Novo says supplies have now resumed. And a group of professional golfers, including Phil Mickelson, are suing the PGA Tour, calling it an illegal monopoly. They claim it is hurting their careers by suspending them from joining the Saudi-financed LIV Tour. The players say it's part of the PGA's plan to freeze out that rival competition. However, the PGA argues that the lawsuit is a bid by the golfers to free ride on its platform. And that's your Bloomberg Business Flash. Francine.
Leanne, I know you're a keen golfer. How's women's golf doing? I've never golfed. I'd be rubbish, but I'd quite like just to, have some alone time maybe with Leanne on the golf course.
Definitely. I would love to take you along to the golf course, Francine. We'll have to share clubs, which is not normally acceptable, but I'm sure we could make it work. No, I mean, the women's golf tour is massive now too, but this LIV Golf has been shaking up the way golf is played. They've got shotgun starts. It's all very exciting, but the PGA is really not happy about it.
Yeah, I'm excited that you're teaching me, but we need to get a lot of the golf balls because I feel like they're going to end up in water.
Let's start at the driving range.
There you go. Let's do it.
Water-free.
Leanne, thank you so much. Leanne there with some of our top stories. Now, let's also check in on the markets. The focus, of course, is on currencies. The focus, of course, is on also what treasuries are doing. So if we bring those up for you to have a look at what some of the concerns out there are. Now, traders ratcheting up some bets that the Federal Reserve interest rate hikes will continue, maybe more aggressively. Investors also assessing the corporate profit outlook. I'm looking at, some of the earnings, for example, surprise U.S. service sector growth, easing jitters over U.S.-China ties in certain parts of Wall Street equities propelled that part of course, the market. A global wave of monetary tightening also hangs over the outlook. So we continue watching some of the market checks, and we see whether there's a reversal at all. Now, Proximie is a technology platform that allows clinicians to virtually scrub in to any clinical setting from anywhere in the world using just mobile device to share their skills. We're now joined by Nadine Haram, the Chief Executive Officer and co-founder of Proximie. Nadine, thank you so much for joining us. I mean, this is hugely exciting for us to have you as one of our catalysts to have a look at how healthcare will be disrupted from now on. Is healthcare almost the last industry not to be disrupted, like, the likes of Airbnb, deliveries, and things like that?
Absolutely. It's a pleasure to be here. And as a practicing surgeon, this is something I'm incredibly passionate about. For over 10 years, I've seen the fundamental challenges that we've seen in surgery around variation in care, variation in outcomes, variation in access. And it's incredible when you think about operating rooms in surgery. It affects all of us. And this is truly a problem everywhere, not just somewhere. And so we really took it upon ourselves to think about how do we really address this opacity, this challenge, and really try and deliver high-quality surgical care to anywhere in the world, no matter where they are.
So Nadine, what is the size of the problem that you're trying to solve exactly? This is basically advice whilst live surgery is going on. Is it for countries and regions where they have less access to healthcare?
It's a great question. I mean, today what we know is that 5 billion people around the world lack access to safe surgery. That being said, I would wholeheartedly say that this is not really a problem of just the Global South. This is truly a problem we see all over the world. We're seeing variation care happening in high-end hospitals in the States, as well as in rural one-bed hospitals in the middle of a desert. We see it in Europe. We see it all around the world. And what we also know is that 18.6 million people die every year because of that lack of access, and 1 million people die every year because of challenges with complications in surgery that were avoidable. And so what Proximie is really trying to address is how do we drive more collaboration, better access to knowledge? How do we share expertise in a way that's meaningful? And so I could simply be sitting right here in my room, and I could virtually scrub in on my laptop, on my phone, into an operating room. And I could discuss the case with a colleague in that room. We could talk about best practices, how to drive the operation. And practically what that means is we can take many views in an operating room. We can layer in telestration tools and augmented reality tools that really enable you to do this at scale and work with people all around the world.
So,
Our
Nadine,
vision
this is different
is
from
really
Zoom.
to deliver this borderless operating room.
But Nadine, so first of all, I don't know
Absolutely.
whether it would make me more. Yeah, it would make me maybe a little bit nervous, just because if it's in a live operating room, there are questions, of course, about if something goes wrong, if you see something wrong, which is why you, I imagine, can't use Zoom, right? Because you need to really focus in on the body parts that people are working on.
Absolutely. I mean, what's really important when you think about those things is first building that kind of trust in a really credible platform. We're fully HIPAA and GDPR compliant. Our platform enables you to get a 360 view of the operating room. We drive very, very low latency, so you don't see any lags or delays, which is obviously critical in the context of surgery, because we really own our stack down to the bare metal. What's also important is that you can't deliver surgical support in 2D. What we're really trying to do is to layer in annotation tools, augmented reality tools, and others that make it very immersive and very interactive. And so surgeons consistently say to us, it's as if we're in the room. And we've done multiple research papers and published papers that have shown that using Proximie is the same as being in the room.
Nadine, is there a problem for actually, a lot of surgeons and healthcare practitioners have insurance in case something goes wrong. Have you had conversations with insurance companies on how this would change, of course, that conversation?
At the moment, what we're really truly focused on is trying to drive excellence in access to care. We're very focused on working with surgeons, with medical device companies, and with health systems to try and drive that expertise. And I have to say, we've seen a huge amount of adoption and enthusiasm around this. We're in hundreds of hospitals around the world. We've done tens of thousands of cases, and we're seeing a real appetite for driving that kind of borderless operating room. I would probably say also being led by a surgeon as a company really brings that contextual awareness, that intimate knowledge of that environment. And so we've really been very clinically led and clinically driven in how we deliver things. And we work across multidisciplinary teams, nurses, doctors, and other members of the care working team.
Nadine, thank you so much for joining us today. Nadine Haram there, the Chief Executive Officer and co-founder of Proximie, one of our catalysts. Now, coming up, Alibaba set to report its earnings later today as SoftBank moves to sell down its stake in the Chinese company. We'll have plenty more on that shortly, and this is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Alibaba led Chinese stocks higher today as investors repositioned ahead of quarterly results later today. The FT also reported that SoftBank has raised cash from selling its stake in the Chinese e-commerce giant, but used derivatives that retain the possibility of holding on to shares. Now, caution remains about a number of potential roadblocks ahead for Alibaba. Now, to talk more about all of this is Bloomberg's Catherine Lim, who joins us from Singapore. Catherine, so first of all, good morning or good evening for you. Can you give us just an idea on how bad some of these results could be for Alibaba?
Right, so we're talking about the performance over April, May, and June. And as we all know, April and May, due to the COVID flare-ups and lockdowns in Shanghai, buying sentiment, plummeted in mainland China. So that's going to affect the commerce business for Alibaba. And notwithstanding, you're going to get the cost that comes in from actually weathering through the disruptions going on in the country as a result of COVID. So that's going to hurt the top line and, more importantly, the bottom line as well.
So do you think, Catherine, that actually the worst is over for the company's business in China?
Well, I think that incrementally, as we stepped out of the lockdown, since June and then into July, there has definitely been sequential improvements. The improvements have been slow, notwithstanding, but definitely I think relative to April and May, we're off the worst from what we've gathered.
Yeah, so, and I don't know if geopolitics, if we put and read too much into it, but how will an escalation in U.S.-China tensions once again affect Alibaba?
Right. Well, that's been an ongoing risk, and I think what we can, what I do take positively is that the actions taken by the company when it comes to, for instance, recently they've announced that they're going to seek a primary listing to try and actually attract more China funds. They're taking steps to address the risk of a potential, U.S. delisting in the event that tensions occurred. So I do think that the company, the proactiveness that the company is taking to address this is taken favorably by the market.
Catherine, what can you tell us about SoftBank? I mean, is it a good fit? Do the leadership, talk to each other? And what do we know about Jack Ma? This was like, we know that he's planning to cede control of Ant Group. Jack Ma we've been trying to, get hold of him for 3 years.
Right. Well, I guess firstly on SoftBank, the relationships with Alibaba goes a long way back. And, there's definitely been collaborations, on a lesser so basis. I guess we'll have to actually monitor and see what is SoftBank's eventual stance, especially in evaluating their investment portfolio But at least from a fundamental perspective to Alibaba, even if the sell down actually do happen, I don't think it's going to affect the business.
All right, so interesting. Catherine, thank you so much. This is a story that keeps on giving. Catherine Lim there in Singapore. Stocks to watch, we're looking at Adidas, Crédit Agricole, Glencore, and Lufthansa. Now, apart from Glencore paying out some $4.4 billion, it is also pretty extraordinary to see Crédit Agricole, the investment bank, driving that beat for earnings. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Katie Lyons in New York, are Anna Edwards here in London. And this is Bloomberg. To name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition with Anna Edwards, Matt Miller, and Kaylee Lyons.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. China's military response. It fires missiles into the sea during exercises off the coast of Taiwan. Meanwhile, the Biden administration is trying to head off Senate Democrats who want to designate Taiwan as a major ally. The Bank of England is poised to make history. It's expected to come out with the largest interest rate hike in 27 years, despite risks of a recession. And our tech bulls set to take a break. US tech stocks have rallied almost 20% from their lows in June as bond yields have pulled back. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines over in New York. And Kaylee, plenty of geopolitical tension that could be throwing the markets off their course over the past 24 hours or so. We've got these live-firing drills taking place in the seas around Taiwan, but markets keeping their heads for now.
Yeah, Asian markets as well. You didn't really see any real sentiment shift in Asia overnight compared to what we saw in the U.S. yesterday. Of course, that big rally, and you saw stocks continuing it in the overnight session. The MSCI Asia Pacific Index as a whole was up about 0.5%, but really the charge was led by technology stocks, just like it was in the U.S. The Hang Seng Tech Index up more than 3%, really led higher by Alibaba, which will be, of course, reporting earnings in just a couple of hours around 7 a.m. Eastern time. Ahead of its report, though, the stock up about 5%. Interesting to see people buying those shares, even though it is expected to post its first quarterly revenue decline ever. The guidance will be really interesting as far as the impact on COVID zero policy, geopolitical tensions, as well as just kind of that regulatory crackdown. Elsewhere in earnings, you did have Toyota reporting as well. It was down about 3% in Japan. It is sticking to its conservative outlook. The executives of the company saying, we are just not confident enough to raise our guidance. Supply chain issues and inflationary pressures, of course, dogging that company. And finally, as Anna was talking about, the tensions in Taiwan, the drills ongoing right now from the Chinese military. Interesting to see the Taiwan dollar strengthening just a touch against the U.S. dollar, but still around that 30 level. It's near its weakest level going back to May of 2020, Matt.
All right, very interesting stuff indeed. We do see sentiment kind of holding up here as well. Okay, futures are red, but they're only down less than 0.1%. And considering what you've got going on in China, considering what you've got going on with the Fed, you would think that the markets may be a little bit more shaken. We've reached a pretty high level on the cash trade of the S&P 500, more than 4,100, and we seem to be holding there. Earnings have been positive. We've also had surprise expansion in services, and there have been a number of other tailwinds for the bulls. Remember, we had such a great July that we're still only down 15% year to date. We have come up 9% from the lows. So the 10-year yield right now at 273.55. Investors are selling that debt. They feel comfortable enough to let go of that paper, and the yield floats up. NYMEX crude, also a tailwind for risk assets as it continues to come down. Only 3 cents, only 2 cents now, but $90.64 a barrel looks a lot better to companies than over $100 a barrel for Texas Intermediate when they're doing their budgets. And Bitcoin moving, maybe correlated with risk assets, down from 5 p.m. yesterday, but still around 23,000 at 22,817. Anna, what do you see going on in Europe?
Yeah, the picture here in Europe a little mixed, but we're not seeing huge losses, as we've said. Some of those geopolitical lines could have led to. We see some weakness certainly coming through in the UK market, but elsewhere a bit of strength. The German market doing okay today. The market in Copenhagen doing pretty well. Some of the heavyweights there that have seen gains recently, the likes of Vestas and Maersk in the wind turbines business and also in the logistics, the freight business. Those names doing pretty well. So those heavyweights lifting that market. Another sector that's doing well today is retail, and this is actually the best performing sector across the European markets today. We see it moving higher as a result of some positive reporting coming through from the likes of Zalando in Germany and Next here in the UK. So despite all those concerns about the European economies, the UK and the Eurozone, and whether we are going to see consumers under pressure, despite that, we see strong numbers coming through from the retail sector, which is interesting in itself. Glencore, the stock actually turning around in the last hour or so, now up by 1.7%. It had been weaker despite the fact it produced some numbers that beat estimates. The company was being a little bit punished by the markets for maybe not returning as much cash as some had wanted. But as you can see, the stock turning things around and up by 1.7% right now. Brent crude, to Matt's point about what's going on with WTI, Brent also a little bit weaker this morning, down by 0.4%, 96.40, well below that $100 a barrel mark. And yes, we got a smaller than expected increase in production from OPEC+, but at the same time, signs of demand destruction perhaps coming through in the US, and that weighs on the price. We've also put in here benchmark benchmark prices for German power. That's what we have at the bottom of this graphic. And this is looking 1 year forward. We've actually touched a new all-time high on these prices. So even if the price itself doesn't mean much to you, the fact that we're at all-time highs for these prices, tying in with the gas story, tying in with the climate story, we'll get to all of that a little bit later on in the program, Kaylee.
Yes, we will. And there is, of course, plenty of more we'll be discussing today as well, with a number of events on the agenda, including Alibaba among the companies scheduled to report earnings. We expect those around 7 a.m. Eastern, so just under 2 hours from now. Around the same time, the Bank of England rate decision will be due. 7 a.m. is when that crosses. House Speaker Nancy Pelosi will be continuing her trip in Asia. This time, she'll be arriving in Japan. Of course, that is as those Chinese military drills are ongoing around Taiwan after her visit there. More Fed speak on the docket, too. We'll hear from Cleveland Fed President Loretta Mester at around noon. And finally, Tesla's annual shareholder meeting gets underway in Austin, Texas at 5:30 p.m. Eastern, Matt.
All right, that'll be definitely interesting. I'm sure Ed Ludlow will have a lot to say reporting on that. Let's get to what's going on in Taiwan. China has begun military drills around the island in response to House Speaker Nancy Pelosi's visit. According to Chinese state-run TV, live fire exercises in 6 areas began, I guess, early this morning, right around midnight. Bloomberg's Bruce Einhorn joins us now from Hong Kong with the latest. So, Bruce, what do we know in terms of how much this has snarled supply chains, ships coming in and out, and canceled flights?
Well, Matt, the Taiwanese government has said that they don't expect there to be a lot of problems when it comes to shipping. When it comes to flights, we have seen that 2 Korean airlines, Asiana and Korean Air, have canceled flights over the next few days to Taiwan. We haven't heard of any other airlines announcing similar moves. Taiwan has said that flights will just be routed via Japan, via the Philippines, away from this area. The drills are expected to continue for several days. Taiwan says that they think that this will end on Sunday. So we have several more days of live fire that's going on. These are in areas that are approaching or sometimes even crossing over into Taiwan's territorial waters. So potential for miscalculation, for escalation is certainly there, but people are hoping, expecting right now that there won't be anything.
Bruce, thanks very much for the update. Bloomberg's Bruce Einhorn with the latest on what's going on around Taiwan. Over to Washington, the White House has sought to minimize the fallout following Pelosi's Taiwan visit. Bob McNally, president of Rapidan Energy Group, spoke earlier with his views on U.S.-China tensions.
We only have about a 5 to 10% risk max that the Chinese and the U.S. will come to blows militarily. And if it happened, it would probably be inadvertent. We don't think Beijing or Washington want to have a military conflict here, any kind of an incident. So I think they'll be huffing, they'll be puffing, there'll be brinkmanship, but I think they're going to steer clear of crossing red lines.
Bob McNally with his views. Now, Bloomberg's learned the Biden administration is lobbying Democratic senators against a bill that would alter U.S. policy toward Taiwan. Among other things, it would designate Taiwan as a major non-NATO ally. Jack Fitzpatrick of Bloomberg Government joins us now from D.C. with all of the details. What can you tell us about this then, Jack?
Yeah, the White House has pushed against this bill to the extent where there's some talk of it being rewritten. As you mentioned, this would designate Taiwan as a major non-NATO ally. It includes about $4.5 billion in security funding for NATO. There was supposed to be a committee vote in the Senate Foreign Relations Committee yesterday. That's being put off. They may work on it in September, but at least for now, the White House has succeeded in bumping this back after the August recess in Congress. This is by Bob Menendez and Lindsey Graham, primarily, 2 fairly hawkish people when it comes to U.S.-China relations. So there may be a bit of back and forth. It's not easy for Democrats to push against this kind of action, to come across as being too dovish toward China. A lot of debate on Capitol Hill around that, but the White House has pushed back against this kind of bill and at least delayed it. There may be a rewriting, and clearly they're pumping the brakes on anything to further embrace Taiwan in the context of military aid, security aid, and as a non-NATO ally.
Well, Jack, of course, we will continue to watch developments on this front, but it's worth noting this is not the only matter they are debating on Capitol Hill. There is also the matter of reconciliation, and we understand a crucial Democratic Senator, Kyrsten Sinema, has some demands. What are they?
Yeah, she has for a while been skeptical of the measure that's in here that would aim to close or tighten the carried interest loophole, effectively raising the taxes you pay on carried interest that would otherwise be paid at a lower rate if it's considered by fund managers as income rather than carried interest, or vice versa. That does not raise a massive amount of money for this bill. It would raise about $14 billion. They otherwise are raising about $700+ billion in revenue. If that measure ended up getting pulled out, it would not necessarily be a deal breaker. It is something that Senator Joe Manchin wanted to include in there. Now, there is still also an open discussion about how exactly they would approach this 15% corporate minimum rate for companies with at least $1 billion in revenue each year. Sinema may want to narrow who that applies to. The question has been raised about do you get to go under that minimum for writing off the depreciation of assets, of investments. That could cut into the revenue that they've raised a bit more. So some of the corporate tax measures and carried interest measures are things that
Are we sure she's a Democrat, Jack?
She is a Chamber of Commerce Democrat who managed to win in Arizona, although pushing back against some of the things that Joe Manchin wanted in the redder state of West Virginia is interesting. At the end of the day, they need everybody on the Democratic side to vote for this, so anybody essentially has veto power, and Sinema is the one who's pumping the brakes a little bit right now.
Jack, thanks very much. Jack Fitzpatrick of Bloomberg Government joining us there from Washington. Back here to London, the Bank of England today is expected to push through the biggest interest rate hike in 27 years, despite growing risks of a UK recession. Let's get to Bloomberg's Lizzie Burden, who is outside the Bank of England. Lizzie, a 50 basis point hike is expected to be the top line coming out of the Bank of England, although there are some still saying it'll only be 25, but we're also expecting other news.
Yes, Anna, we're expecting 2 dissenters on the 9-member Monetary Policy Committee to vote in favour of 25 basis points. Why? Because the labour market is past peak tightness. People are having to come back to work to help deal with the cost of living crisis. And you say the recession risk, and don't forget the Bank of England went to tighten first before the ECB and the Fed, so maybe there's less pressure to keep its foot on the gas right now. But at the same time, inflation is at a new 40-year high in the UK. We're not even at the peak yet. And so I'm curious as to how the bank is going to adjust its inflation and growth forecasts today. The National Institute for Economic and Social Research has said that the UK is already in a recession. The Resolution Foundation think tank has said that inflation is going to peak higher and last longer. And then, alongside the forecasts and the decisions, we're expecting more information on quantitative tightening. The Governor, Andrew Bailey, has said we're going to see 50 to 100 billion pounds worth of QT in the first year. What we want to find out today is the pace and whether bonds will be sold in the same maturity baskets as they were bought in going into QE. But really, the ironic ending to the quantitative easing programme is that because the Bank of England paid over the odds above face value for these securities in the first place, and the Treasury's got to cover its losses, what was the government's cash cow is now turning into a drain on the public finances.
Lizzie, thanks very much. Lizzie Burden there making a very interesting point, standing outside the Bank of England. We're going to bring you full coverage of the BOE's decision, due at 7 a.m. New York time, 12 p.m. in London. Now, something that caught my attention, a small Hong Kong-based company called AMTD Digital, its market value is now topping more than $200 billion with just $25 million in revenue. This is, I would say a small financial firm, Kaylee, that is now worth more than Goldman Sachs, and one man owns about 34% of the shares. So it'll be interesting to see if he makes the rich list.
Yeah, it's a pretty remarkable move. Since the stock IPO'd, back in July, so it's only been a couple weeks. It's up 14,000%. That move is one that analysts can't even seem to make any sense of, although people are pointing to the fact that that public float is quite small as potentially a reason why, but definitely one to keep an eye off because eye-popping move for sure. Now, there are some other moves to keep an eye on in pre-market trading. They're not quite as eye-popping, but they're worth noting nonetheless. One of the ones moving to the downside is Lucid Motors. Of course, it's the EV startup, once again cutting its production target for the year. This is the second time they have done that. The original target was 20,000 vehicles this year. They now say it's only going to be up to 7,000 vehicles. Analysts saying it's looking like it's going to be very difficult for this company to catch up with demand. That stock is down nearly 13% before the bell. Another stock that is moving lower on a guidance cut is Qorvo. This is, of course, a chip maker. It makes a lot of chips for smartphones. Weakening smartphone demand, especially in China, weighing on this company's second quarter forecast. That stock is down nearly 4% as a result. One more optimistic story out there, though, is Sunrun. This is a big solar company. It topped expectations on the guidance, and as a result, that stock is moving higher by about 9% in early hours, Anna.
Coming up on the program, Kaylee, Josie Dent joins us, managing economist at the Centre for Economics and Business Research. We'll get back to the Bank of England theme and talk about whether we will get 50 today. That seems to be the market's expectation. Some questions around it, though. And what detail will we get on quantitative tightening? This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, of the US, Europe and the UK, have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
When big tech reports earnings.
Another big day. Apple, Amazon crushing it.
Bloomberg brings you the headlines first.
Revenue growth falling for the first time.
Missed on every top and bottom line metric apart from one.
This really is a story of strength.
Plus, expert analysis to keep you informed.
We've been waiting for this.
The fact that they are not profitable is concerning.
Is this a company that indicates maybe a recession is coming?
We think it's going to be a major bounce back coming in next year.
Nobody covers tech earnings like Bloomberg, your global business authority.
Welcome to Bloomberg Surveillance Early Edition. I'm Matt Miller, Kaylee Lyons here in New York, Anna Edwards with us out of London. Now, we are simulcast on radio and television. Those of you listening can't see this chart that I've got in front of me, but I'm going to walk you through it. And there's an element of trust here as well. I'm sure you trust me. Junk bonds are signaling that the U.S. is going to avoid a recession because we've seen spreads tighten up to levels that are lower than at the beginning of the previous recessions, the surprise COVID recession that we had briefly in 2020, and the big, great financial crisis that we had in 2008. The thing I see on this chart is that we saw kind of a head fake at the end of 2007, and just a few weeks later it turned around and brought us into the greatest recession that we'd seen since the Depression. I'm wondering if this move is that kind of head fake as well. Dana El-Battaji joins us, Bloomberg managing editor for credit, to give us her take. Dana?
You know what? I'm so glad to hear your reading of that chart, because that's exactly what I see. I don't see basically a signal that recession isn't coming. What I'm actually seeing is that there's been a dislocation in markets, and that's basically because we had this risk rally in July that had nothing to do with the economic data that's out there. And I think that there has been a realization over the last few days that there is this gap now in reality between where spreads are supposed to be and where they and where they actually are.
Okay, and Dana, let's bring that conversation to the UK, because we're going to hear from the Bank of England today. I mean, businesses shouldn't be surprised at rising rates. We've seen that for a few months, of course, but this will be possibly the biggest rise we've seen, with a 50 basis point hike. Again, they'd be in central banking good company, but what does that do to UK PLC and its debts?
Well, it's actually quite frightening, because at the end of the day, with all of the corporates out there that are facing this wall of debt that will come due, the sterling market is quite dead. So we haven't had many deals this year, and now with this extra hike, if it is in fact 50 basis points, it will absolutely kill that market. So how will firms fund their expenditure and so on going forward? I really have no clue.
Okay, Dana, thanks very much. Bloomberg's Dana Al-Battaji joining us there with the latest on funding corporates on both sides of the Atlantic. For more market analysis, check out MLIV Go. That's the function to use to get on top of the Markets Live blog. This is Bloomberg.
Ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think that the business is evolving to have much more customization on clients' portfolios, and that's a good thing, but it's a challenge to kind of move into that mode.
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry crossed $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. No one covers the world like Bloomberg.
Does the sense it'll get to 7% in the coming months? Do you see that coming true?
Federal Reserve, of course, raising interest rates by 75 basis points again.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kayleigh Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. In the UK, Foreign Secretary Liz Truss has rebounded from an embarrassing policy U-turn to regain the momentum in the race to become Prime Minister. Truss received the backing of former Chancellor Sajid Javid. That's a blow to her rival Rishi Sunak. Javid wrote in the Times newspaper that Truss would challenge the status quo and deliver immediate tax cuts. Ukraine's President Volodymyr Zelensky wants direct talks with China's Xi Jinping. Zelensky says that Beijing hasn't replied to Ukraine's request since the Russian invasion in February. He told the South China Morning Post that China could, quote, put the Russian Federation in a certain place. There will be another attempt to save the landmark Iran nuclear deal. Diplomats from Iran, the U.S., and Europe will meet again in Vienna after months of deadlock. The accord fell apart after Donald Trump withdrew 4 years ago and reimposed sanctions on the Iranian economy. That led Iran to step up enrichment of uranium. And the U.S. Senate has voted overwhelmingly to add Finland and Sweden to NATO. It's a move aimed at bolstering the military alliance after Russia's invasion of Ukraine. Turkey is still threatening to block the two countries from joining. Coming up, as we weigh geopolitics and inflation and look ahead to yet another central bank decision with the Bank of England on deck in just a few hours from now. 50 basis points is what is expected and what Josie Dent is expecting. She is a managing economist at the Center for Economics and Business Research. We'll get her thoughts on the Bank of England's policy path given the difficult growth but persistently high inflation environment the UK finds itself in. That conversation just ahead. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund is typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you would hope to get paid for their liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Ken Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. China's military response. It fires missiles into the sea during exercises off the coast of Taiwan. Meanwhile, the Biden administration is trying to head off Senate Democrats who want to designate Taiwan as a major ally. The Bank of England is poised to make history. It is expected to come out with the largest interest rate hike in 27 years, despite risks of a recession. The Bank of England also will give details of how it plans to reverse some of the $1 trillion in quantitative easing stimulus it pumped into the economy over more than a decade. And our tech bulls set to take a break. US tech stocks have rallied almost 20% from their lows in June as bond yields have pulled back. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons over in New York. Here in London, of course, we're looking ahead to the Bank of England. Matt, thinking about that, and we'll certainly get a guest perspective on that from what's driving the markets over there in the US.
Yeah, that'll be interesting for the pound here in the US, of course, and really around the world. It's all about the Fed. The markets seem to be ignoring Bullard's call for rates to go to 3, I think he said 3.5 around there, or to 4% by the end of the year. And now we're on our way back up. We also see yields coming back up as investors let go of bonds. Maybe positive earnings are a tailwind for the bulls. We've come up, as you say, 20% in tech stocks, 9% across the broader market since the lows in June. So we've had a pretty good run. Right now, the dollar index is down about 94 points right now, 94 basis points, and that brings us 1271. The dollar has been a real headwind for the rest of the world, and this comes down a little bit. That helps the global economy. And then Bitcoin right now off about 2%, but still at almost 23,000, 22,905. Kaylee, what do you see in terms of pre-market movers here?
Well, there's a lot of big ones to the downside. Lucid Motors really leading the way lower. It is down about 13% after cutting its production forecast for the year once again. Originally, it was 20,000. Now they say they're only going to produce as much as 7,000 of those electric vehicles. So that's weighing heavily on the stock this morning. You also have Fortinet, a cybersecurity company, down pretty hard. It's down about 8% after cutting its service revenue forecast. Macro headwinds is the reason why. And Qorvo cutting its second quarter revenue outlook as well. It, of course, is a chip maker for smartphones. Waning demand there, especially in China, is a drag for that company. One more positive story out there, though, Sunrun. It beat expectations. Big solar company, of course, benefiting in a lot of ways from the energy crisis we see ongoing in so many different places in the world. Anna, that stock is up about 10.5% before the bell.
Yeah, some of the renewable energy businesses doing well today here in Europe as well, Kaylee. This is what we see across European stocks then. The Stocks Europe 600 up by 0.3%. Some retail names doing well. We've had some positive reports out from the likes of Zalando in Germany and Next here in the UK. Despite concerns about the state of the global consumer, there is some resilience in these reports. Glencore also reporting numbers up by 1.7%, turning around earlier losses for this giant of the commodities trading universe. And of course, the boost that we've seen, the return that we've seen to coal, that is certainly something that is boosting Glencore, and they've managed to turn around that performance in just this morning's session. As I say, started out in negative territory, now up in positive. Brent crude up now by 0.4%, but still with a 97 handle, not 100. We dropped down from those $100 a barrel levels. We will see if that is maintained. Some concerns around demand destruction had driven prices lower yesterday. And the name on the last piece of this graphic might not mean much, but this is German power prices 1 year forward. We've seen a new high on these German power prices. In fact, the German power prices, French power prices, European power prices generally have been moving higher. Concerns around not just gas, but also around nuclear energy and indeed getting coal to the places it needs to get to. So we'll continue to have those conversations as we go through this hour then, Kaylee.
Yep, we'll have more on that in just a few minutes. But first, let's focus in on the UK with the Bank of England decision coming up less than 2 hours from now. Josie Dent, managing economist at the Center for Economics and Business Research, is joining us now. Josie, you believe the move today will be 50 basis points. That is what the market expectation is as well. How high, though, are the odds that they only go 25, and what does that do to their credibility?
Yeah, so we're expecting a 50 basis point rise, which would be the first one in a long time. So far in the past year, we've just been seeing small increments, usually of 25 basis points. So it could stick to that and just have a 25 basis point rise. Similarly, we might see slightly more aggression with a 75 basis point rise to match the Fed, for instance, last week. And so it's hard to say what they've decided and what will be announced at 12 o'clock today, but most people are expecting that 50 basis point rise. And that's to do, of course, with the fact that inflation is so high at the moment. We saw 9.4% CPI in the latest data, which is nearly 5 times the target rate of 2% CPI inflation. So they have got to be slightly more aggressive than they have been to try and stop that acceleration we've seen over many of the last months in inflation. There is also, the factor of the other central banks, the ECB and the Fed, have both recently made 50 basis point or 75 basis point increases in their base rates. And so international exchange rates are heavily impacted at the moment by these changes in central bank interest rates. And if the Bank of England disappointed markets today with a 25 basis point rise, then there will be implications on the pound. And so that is something that the Bank of England will have been considering.
Traders, how are you today? I'm going to place order. As you remember, we purchased Bitcoin at 23,061. Okay, right now I'm going to place order to sell. So at this position at 22,946. Okay, please place your order 22,946. If something happened with Bitcoin and if it will change direction, we will secure our 500 pounds, 946. Okay, so stop loss placed. We're already in profit, and stay with me. I will adjust the price we sold before yesterday. Bitcoin, it was 23,061. Okay. $0.61. Let's change to red color, and let's wait. Let's see how far profit we might increase profit, how far Bitcoin will go from that point. Anyway, whatever happened, we're already in profit, 500 pounds. Okay, guys, I'll speak to you later. Stay safe, and don't forget to place stop loss on your trade. Don't be a hero. Don't wait until maybe you will get 100 million pounds on this trade. It never happened. It will not happen. And if you will make it as the constant in the practice, if you're doing paper trade or if you're trading like we do real money, if whatever happened, you always will place trade how it's supposed to be, you will never lose any money at all. This is called money management. You have to be disciplined. You have to control all emotions, anything that happened with market. All guys who try to be emotional, they lose money, and we take their profit. This is how it is. Market always keep its balance. So for you guys, this is all you can find on our strategy. You need to go to companyeye.co.uk and get the strategy. Stay safe, and I'll speak to you later.
Year. And so while we might see some quarters of contraction, it's not expected to be a prolonged period of downturn. And so that's why it's not going to be a fully blown recession, as you said.
And we see financial conditions have loosened up a lot in the UK. FCON Go on the Bloomberg is an easy way to gauge that. Plus, you have so many hawks on the Bank of England, only a couple of slightly dovish members. Why on earth are they only going to get up to 175? I mean, why aren't they at 3.5?
Yeah, of course. I mean, to get a grip on inflation, much higher interest rates would probably technically be needed. But it's this factor that they probably are forecasting, and we'll see later today, at least 1 quarter of contraction, if not 2. And so they've got to balance the labour market and growth in the economy with inflation. And of course, inflation, we've talked a lot about this, in the UK at the moment is predominantly supply side driven rather than rapid demand, which is increasing prices. It's the factors of supply chain issues and of course the war in Ukraine, which is having implications on energy prices and food prices. And so there's a question of how much can interest rates, which are a demand lever, affect these supply issues.
Josie, how do you measure that? I mean, we all hear the supply side problems in the news every day, but nominal growth is so high. Demand seems incredibly strong. Isn't that a huge part of it? How do you differentiate the drivers of inflation?
It's tricky to do, and I think we know that there are big supply impacts because we can see, of course, the change in Brent crude oil prices and gas pump prices at energy pumps. And we can see factors such as shipping costs and shipping times that have been incredibly slow, and that naturally increases costs for businesses, which is what they're saying in surveys. And of course, we can look at producer price inflation, so the costs that producers and service inflation as well that companies are facing, which is increasing at a much more rapid pace than consumer price inflation. So we know that businesses are facing higher costs and they're predominantly import costs. Yeah. But as I mentioned, so far actually, this year in the UK, we have seen quite resilient growth. We haven't seen much in the way of a contraction. So there is some demand that's trundling along, but there is also a cost of living crisis, and people are experiencing real wage cuts. They're struggling to pay for all the goods that they need. And so that will be weakening demand, not strengthening it.
Well, but Josie, to the point on higher costs that people are facing and weakening sentiment, that raises the question of the fiscal response. And Liz Truss, who seems to be gaining momentum, would like to cut taxes. How does the BOE think about that?
Well, there are several elements there. So, of course, if we cut taxes, people are saying there could potentially be an inflationary response, which does make sense. If people have more money to spend, they can go out and buy more things, which creates more demand, and we might see higher prices. We do think there is some room for tax cuts, but there is, of course, a limit in terms of how much you can do without stoking more inflation. So there's a fine balance there. Some things, such as more targeted tax cuts, of course, perhaps a fuel duty cut might be a good thing to consider given the current high rates of petrol at the pump. And so there is some room for tax cuts, but they've got to be balanced with the inflationary impacts.
Josie, thanks very much. Thanks for joining us. Josie Dent of the Centre for Economics and Business Research. Coming up on this programme then, Europe's energy crunch in focus. We will discuss how it is becoming ever more acute. Can nuclear power help fill the gap? We've talked about that this week. There are also questions about the extent that coal might be in trouble now. More on that next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Scorching temperatures are adding to Europe's energy crisis. France says it will likely extend pauses to its nuclear generation capacity. That's as high river temperatures continue to make it difficult to cool down nuclear reactors. Joining us now, Rachel Morrison, Bloomberg editor for power, gas and renewables in Europe. So the perfect voice to have on this subject, which gets ever more complex then, Rachel, when it comes to the headwinds that the European economy is facing. Let's focus on the nuclear issues. So it's higher river temperatures specifically then that make life difficult for the likes of EDF.
Yes, in France we have more than half of nuclear capacity offline. Some of that is extra checks that EDF has had to do on the fleet, but we are seeing some extra cuts coming from nuclear stations along two rivers which use the water to cool them. And because of high river temperatures, they're limited in how much water they can return to the rivers, so they're having to cut output at a time when really Europe needs as much electricity produced not from coal or gas as it can get.
Yeah, Rachel, to me this story is amazing because it looked for so long like Germany had made the biggest mistake in relying on Russia for gas, and the French were geniuses for continuing to get electricity from nuclear power. Now the French are in so much trouble that the Germans are considering letting their nuclear reactors run longer in order to supply their neighbors with energy. Do you think that's going to help?
Yes, it's been such a huge issue in Germany, that nuclear phase out, and the rhetoric is starting to change with the government sort of making some noises saying that they're considering keeping 3 stations online beyond the end of the year when they're supposed to shut. But really that needs a decision soon because there's fuel supply to secure, maintenance to do, staff to pay to make sure that it can happen. So we understand the government are looking at a sort of stress test to see if that's possible. But yes, at the moment, France needs extra imports from places like Germany, from the UK, from Spain. And so with that extra demand coming from France, which usually exports power to everybody, it looks like there's going to be even more supplies needed from things like nuclear in other countries.
So, Rachel, is that what this comes down to, just searching elsewhere for supply rather than trying to react on the demand side? I mean, where are we in reducing demand in Europe as they had proposed with natural gas?
Germany has made some steps towards that. Of course, in summer, there are limits to what demand you can reduce because people aren't really using their heating. The lights don't go on until later in the evening. So there were some comments by the regulator today which talked about a sort of 5% decrease in demand, and really Germany needs to be more like 10%. So as we get into winter, that pressure will increase. And of course, throughout Europe, we're going to need to see that. The UK is sort of lagging behind somewhat in that energy efficiency drive, but as the temperatures start to cool, we expect those kind of campaigns by governments to pick up pace.
Yeah, we're certainly hearing more and more on that front, aren't we? And it's interesting that the warm river water is the issue in France. Low river levels, also now an issue in Germany and for Uniper. Rachel, thank you very much for bringing us the latest on the energy space in Europe. Rachel Morrison with details there. Coming up on the programme, Guggenheim's Scott Minerd takes stock of his investing career and his biggest money mistakes. More on that shortly. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today. It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Bloomberg Green, bringing you the business, data, and innovators fighting climate change.
Reinventing climate news on TV, Quick Take, and Bloomberg.com. This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. And, well, we've all made money mistakes, but behind each blunder is a lesson learned. In a new online series, Bloomberg Quick Take Scarlett Fu speaks with money managers and other leaders in business to hear their big money mistake. In this edition, she sits down with Scott Minerd, Guggenheim Partners Global CIO. Here's part of their conversation.
I was working for Price Waterhouse. It was 1980, and real estate prices had been skyrocketing in Florida. And so I wanted to get in on the real estate boom. I managed to scrape together everything I had, and I found this condominium that I could just get into. I bought it.
How much were the interest rates?
At that time, I got a special subsidized mortgage, which was 9 7/8%. Right.
When did you realize that it was a mistake?
Well, you mean fully a mistake?
Yeah.
Because it was about a week after closing I started to have second thoughts. I began to realize, as prices began to soften and decline and sales were going in.
What was the listing price?
It was, I think it was $54,750. You remember this when you suffered through something.
That's very exact. And you said your monthly payment on the mortgage was?
It was about $600.
And your annual salary at the time was only
$15,000.
Okay.
That was the mortgage and taxes. I started to feel like a captive. It wasn't like, if I decided I wanted to change jobs or move somewhere, I was tied down with this property.
How did you extricate yourself from this real estate investment in Florida? Like, does it end with a happy story?
No.
No.
It was actually probably around 2002, 2003, I finally sold it at a loss.
2002, 2003, this is after you retired, unretired, came back to work at Guggenheim, was leading the firm. That's when you sold the apartment at a loss?
Right. Well, it's going to come back.
Wow. Did you make a phone call to anyone about this? I mean, did you tell anyone about this experience, or were you?
No, I was hiding.
You were hiding?
Well, I was embarrassed. My family saw me do this. Everybody saw me do this, and I'd actually gone to my grandparents to get some of the down payment.
Is this something you think you could have learned from a textbook or from someone telling you, or did you have to experience it firsthand yourself?
It taught me a lot about the usefulness of history, because Florida, South Florida in particular, is notorious for real estate booms and busts going back to the 20s. And so, it probably affected the way I looked at all investments going forward, which was not to just listen to the conventional wisdom of what everybody else was saying, but to take what they were saying and, actually, really in reality, challenge it.
That was Scott Meinert of Guggenheim Partners sharing his big money mistake with Quick Takes Scarlet Fu. You can catch their full conversation on Bloomberg Quick Takes Twitter account. And Matt, I got to be honest, while we're talking money mistakes and he's talking about the high rate he was paying, and I am planning to buy a car after work today. At least that was my plan. It's probably not the ideal time. It very well may be marking the peak in used car prices, and rates aren't exactly as favorable. So now I'm questioning.
Well, I think you should still go through with it. But while he was talking, I was thinking my big money mistake may have been a few months ago when I bought a house in Westchester at the absolute top of the market. Fortunately, I locked in a much lower rate. But you never know.
That was sensible. It's okay, Kaylee. I don't think you buy used cars for their resale value anyway. So, even if we've hit the peak, maybe that's okay. And maybe it's more sensible to buy the used version because I don't know, Matt, how long have you been waiting for the new one?
Yeah, I've been waiting about 7 months now, but I know my truck is finally on the way. I've heard it's on a train en route to
well, this
to
is
New York.
Exciting.
Yeah.
The very important message I took away from that really nice piece by Scarlet Fu with Scott Meinert is just be really careful if you borrow from your grandparents because it just comes with a whole load of emotion, it seems. That is it for Early Edition. More surveillance is ahead with Tom, John and Lisa. We will hear from two former Bank of England officials, Jennifer McKeown and Danny Blanchflower, join the team. Lots to say in the run-up to that Bank of England news due in an hour or so. This is Bloomberg.
Is the chance of humankind to really understand itself. How much of that is true? How confident? Did you actually overachieve? Did you, back then realize that we would be using AI in many different jobs? Was it slower or faster than you thought at the time?
I think if I had a 35 or 40 year prediction task, I would have been more or less on track as to where we are today. But I would have predicted steady linear increase over time. But instead, the field had very minimal improvements until the last 5 or 10 years. Then it really took off. I think we ended up in the right place, but I was very wrong about the trajectory. To this date, we still know very little about how the brain works, but these machines are getting ever more powerful. And I feel in some sense, we did end up learning what human intelligence is by learning what it is not. If we exclude all the things machines can do better than us as what makes us unique in our human intelligence, then now we can rule out many, many things because AI or machine learning has become so good at so many things that what's left must be the key aspects of human intelligence.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
They don't want recession, but they do need things to slow down for inflation to continue to go lower.
Fed's got a lot of work yet to do. And we think inflation is going to be running still at 4+.
What I worry is on the other side, that the Fed works too fast
too much.
I think that the big issue we have in the market is that the Fed is not about to pivot.
We have right now about a 50-50 chance in terms of tipping over into a true recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures positive again, up 0.1% on the S&P. TK, we have ripped off the June lows.
We come off the June lows and it's within an August gloom. John, I'm absolutely overwhelmed from hedge funds to what we heard from Linda Dissel yesterday at Federated. The caution out there, the reticence to believe in this equity rally, to start strong this hour with Howard Ward is wonderful. And within that, John, look at the news flow this morning going to Governor Bailey's 7 a.m.
Looking ahead to that rate hike, potentially 50 basis points coming up in about an hour from now. Tom, for me, it's not a wall of worry. It's a wall of doubt. I'm with you. Every single percentage point rally, there is just note after note saying, nope, fade this, nope, fade this. Tom, we're 19% higher off the lows on the NASDAQ 100, up more than 13% off the lows on the S&P.
I mean, I had my intern write the banner in August gloom. Let's do it again on radio. John says it better. It's an August doubt. I like that.
A big
There's just
wall
a
of doubt,
complete
Tom.
There's a doubt. We're very doubty.
The Fed officials have done, Lisa, exactly what we anticipated they would do, and it's driven yields higher at the front end. Curves inverted even more.
Look at the inversion.
The equity market, though, is not paying any attention to that, seemingly, Bramo, over the last couple of days.
Well, here's the conundrum that I'm wondering about as you talk about the doubt. There is a doubt about the fundamentals that are driving that lower end rate picture lower, but there is belief that the Fed is going to ultimately come to the rescue of this market that is still embedded in this market, that eventually there will be rate cuts. I was reading TD Securities last night. Likely the expectation that quantitative tightening will stop next year in addition to rate cuts. This still is the belief embedded in markets.
When you say TD, we hear Priya Misra.
Exactly.
Priya Misra, Lisa, looking for negative 40 basis points
Call
on
of the summer.
2/10. Here we are. I mean, we're basically there, aren't we?
And when we take a look, Jeff Gundlach was saying, rough road ahead. He tweeted out this accelerating decline and this accelerating inversion, that 210 spread. How much does that indicate recession? It has most of the time. Now people are saying, well, we're already beyond that. How much is the belief and the lack of doubt that you're seeing in the price action really reflecting the backdrop of easier financial conditions led by the Fed?
Have you called it, Tom? Call of the summer?
Yeah, I think Priya's call is a call of the summer. I went back, John. I looked, did some fancy mathematics. I'm not going to bore you with on. It's a No Math Thursday. Let's be clear on that. But John, I looked at how fast we've inverted, and it's literally a Volcker equivalent. We've moved 170, 180 basis points down, down, down through zero into inversion, and it really harkens back to what we saw off near the crash of 87 into the Volcker 89.
The deepest inversion since the early 2000s. We'll build on that story for you a little bit later this hour. Futures right now, your price action shaping up as follows. Positive 0.2% on the S&P, on the NASDAQ 100, up 0.25%. The lift continues. Yields bounce back at the long end. 10-year yields higher by a couple of basis points to 272.46. And crude, just about holding on to the 90s here, Lisa. 91.57 at 1%.
I don't understand the crude picture. We'll dig into that based on what we got yesterday from OPEC Plus, and then what we got out of the U.S. showing a decline in demand, a really mixed picture there, which we will look into further. What we're looking at today is in about an hour time, the Bank of England is expected to raise rates by the most in 27 years, following the 50 basis point trend that we have seen around the world as a minimum rate hike for the developed world. How much does this indicate the necessity of hiking rates into a weakening economy? I'm watching the pound. We have seen it completely weaken versus the dollar. How much further does that have to go? At what point do outsized rate hikes edify a currency versus weaken it further because it only undermines the economic trajectory even further? This is the conundrum facing the Fed. This is the conundrum even more facing the ECB. At 8:30 a.m., we get U.S. initial jobless claims. We have seen them start to tick up just very, very slowly from near record lows. At what point will this be the sign that people are looking for, that perhaps the Fed will take their foot off the brakes? At what point are people going to see this as strength if it stays at this flatline kind of level? Strength giving support to this idea that the Fed needs to go a lot further. How much does that challenge not just the doubt in the market right now, but the opposite, the strength that we're seeing despite all of that doubt, John, that you were talking about? Today we get a slew of earnings: Lyft, Expedia, TripAdvisor, AMC Entertainment, Live Nation. All of these are interesting to watch for consumer discretionary spending. We've seen a really mixed picture, and we will continue to. How much do we sense, yes, companies adapting and adjusting, but forecasting an ongoing weakening in the backdrop of consumers?
Resilience, the takeaway of the last couple of weeks. Lisa, thank you. Joining us now is Howard Ward, CIO of Growth Equities at Gabelli Funds. Howard, I've got to ask you straight up, how durable do you think this rip-roaring rally is?
Well, we don't know, Jonathan, and that's the whole point. Investors don't know exactly how this script is going to play out. But if you don't believe in market timing, and history has shown that market timing is a loser's game, and I would challenge you to give me a list of the greatest investors of all time that have been market timers, because it would be a pretty short one. We don't know. What we do know is that a lot of stock prices are down 20, 30, 40, 50%, and therein is opportunity. And we're going through a period where the economy appears to be weakening further. We may or may not be in a recession, but recessions tend to be short-term phases in the history of time, and they've always been opportunities for investors to redeploy cash or to upgrade their portfolio by way of stock selection. I don't think this is at any different time, and so I think the current, concerns about interest rates, we have to go back. Interest rates are still historically low. In the 1990s, which was one of the best decades for stock prices, the 10-year Treasury averaged more than 5% and was at higher than 6% towards the end of that period. And the earnings yield on stocks was well below the Treasury yield, sort of like a 3% earnings yield versus a 5 to 6% Treasury yield. The situation is completely inverted today. The earnings yield on stocks is 5 or 6%, and the bond yields are 3%. So there's some margin there for interest rates to go up and for earnings to go down. And stocks are still going to look, I think, historically attractive in terms of their pricing. So I think it's time for investors to realize that we don't really know what's going to happen. We know market timing doesn't work. Stock prices are down. Take advantage of it.
Howard, it's a Howard Ward August, and by that I mean all I'm hearing is the word quality. Everybody's discovered the word you've lived by for decades and decades with Mario, which is quality. Define for our audience on radio and TV this strange word, quality.
Well, Tom, that's a good question. In the world of investing, I think most people view the term quality to refer to a company's balance sheet and its ability to generate free cash, its ability to withstand a recession, difficult times, and that remains very much true today. And in fact, if you went back and looked at studies on stock market components, you'd see that the balance sheet strength is absolutely a trait of outperforming equities during very difficult recessions or bear markets. And so, sure, when we are possibly in a recession, we're in a bear market, quality is important in terms of giving you some protection to the downside, although certainly you're not going to escape unscathed.
I wonder how you feel about European banks.
Okay, traders, we closed trade on Bitcoin. As you can see, we made £500 in profit. Well done, guys. All of you who decided to trade with me. Before yesterday, we entered position and we closed it just a couple of minutes ago, as you can see. We will extract this video. In a couple of days, you can see extraction of the videos. And for new people, it's kind of worth to look at our channel and where you can find other videos, extracted videos from live trading session. I understand this is kind of for new people difficult to follow all day our trades, because I'm not talking 24/7. I am only, you can see me on the screen when I see the chance and opportunity arise to trade these or other securities. So some of videos extracted from live trading session, and you can see how we trade. Otherwise, if you're already a trader, if you're already copying trades for several months or years, you're welcome to stay with me and follow trades, copy trades. If you're using strategy, just to remind you, you can trade any indices, any stocks, any securities, any forex pairs you like, as long as it's really tradable asset, as long as it won't stay just in one line on a screen for several days. Okay, guys, good trade, well done, and I'll speak to you later.
And Credit Suisse in particular is what a disaster that stock has been. It's just been one calamity after another. And they've tried to bring in new executives and nothing seems to work. So I don't know what the answer is there. Hopefully they can get their act together at some point. Come on, board, do your job.
It's difficult. Howard, thank you. As always, Howard Ward there of Gabelli Funds. That stock intraday up a little more than 2%. Tom, year to date and over the last several years, it's been a struggle for that name.
Yeah, it has as well. I'm doing a compare and contrast with UBS with 71,000 jobs versus the 51,000 at Credit Suisse, and that surprises me. I look at UBS as maybe better run, and so where's that proportional number to Credit Suisse? And you know, my tilt, John, is yes, that's right. It's to a lower number, reduced from 51,000.
Hey, Thomas, the same old question. What do they want to be when they grow up? How many times have we asked that of Credit Suisse? Of other European names too, of Deutsche Bank, etc. Take your pick.
I used to read their securities research a million years ago. Good morning, Mark Flaherty, who was absolutely fabulous on the oil business. And I'd literally look at their font and go, do they understand their font and their securities research is unreadable? I mean, it's little stuff like that, and it's big stuff like some of the huge errors we've seen recently.
I think there's some bigger stuff than that, Tom.
I think there would be bigger stuff than that.
I don't even think that's the small print.
DLJ, you could read the research. Credit Suisse, you couldn't.
I think that's just one of your complaints.
They don't use Helvetica.
Lisa, I just wonder what David Harrow's thinking
you don't
right
use
now.
Helvetica.
Yeah, exactly. When do they get out?
Monotype
Does he
Bembo.
just throw up his hands and say, forget about it?
The patient capital that's been behind that
the
name.
Bank of England uses monotype Bembo.
Tom, is this your rant of the morning?
This is my font. Yesterday we did Bob
What font
Seger.
they use?
Today we're doing fonts.
There was a great documentary on that.
If anyone would like an advisor to your board, Tom's available. Futures on the S&P, up 2/10 from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. China has begun military drills around Taiwan in response to House Speaker Nancy Pelosi's visit there. One of the exercises involved missiles being fired into the sea. Taiwan is downplaying the effects of the drills on shipping and airplane routes. The Bank of England today is expected to raise interest rates by the most in 27 years. Investors are expecting the first half-point rate hike since 1995, despite risks of a recession. The BOE also will give details of how it plans to reverse some of the $1 trillion in stimulus it pumped into the economy over more than a decade. The US Senate has voted overwhelmingly to add Finland and Sweden to NATO. It's a move aimed at bolstering the military alliance after Russia's invasion of Ukraine. Turkey is still threatening to block the two countries from joining. And there will be another attempt to save the landmark Iran nuclear deal. Diplomats from Iran, the US, and Europe will meet again in Vienna after months of deadlock. The accord fell apart after Donald Trump withdrew 4 years ago and reimposed sanctions on the Iranian economy. That led Iran to step up enrichment of uranium. First half profit at Glencore more than doubled to a record thanks to soaring coal prices. The world's top coal shipper will return an additional $4.45 billion to shareholders in dividends and share buybacks. Glencore has been one of the biggest winners from the global energy crunch. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Apple fans will likely have to wait a little bit longer than expected to get their hands on Apple's first mixed reality headset to compete with Meta's Oculus. The iPhone maker had planned to reveal the new device as early as this June at WWDC and then release it later this year. But the company has been facing some development challenges related to the device overheating, camera technology, and a new operating system. That means that an intro as early as the end of this year or early next year with a wider consumer release in 2023 is more likely. The headset is planned to have super fast M1 Pro-like chips, immersive audio and speaker technology, and capabilities for media consumption, gaming, and communication. The headset will be pricey, however, and probably cost well north of $1,500. The product will be Apple's first big new bet since the Apple Watch launched 7 years ago, and it should enable an all-new class of applications in a developer ecosystem through an onboard app store. Apple then plans to use WWDC 2023 to engage VR and app developers to write software. The first headset, however, is only the beginning for Apple's ambitions in the space. The company is planning a standalone augmented reality headset as a follow-up later this decade. I'm Mark Gurman. This is Power On.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Big Tech reports earnings.
Another big day. Apple, Amazon crushing it.
Bloomberg brings you the headlines first.
Revenue growth falling for the first time.
Missed on every top and bottom line metric apart from one.
This really is a story of strength.
Plus, expert analysis to keep you informed.
We've been waiting for this. The fact that they are not profitable is concerning.
Is this a company that indicates maybe a recession is coming?
We think it's going to be a major bounce back coming in next year.
Nobody covers tech earnings like Bloomberg, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Season is here.
Everything I've read has just got the R word. Resilience, not recession.
Earnings are expected to be so weak that I think that presents a very intriguing opportunity.
Bloomberg breaks the numbers first.
We get a deluge of earnings globally this week from Alphabet and Microsoft.
With exclusive expert analysis.
These earnings have proved to be really inconsistent, not actually showing a real picture that goes one way or another.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
The president wanted to see oil prices down, wanted to see gasoline prices at the pump down. That's what we're seeing. And I think what's very remarkable here is that we're seeing that happen while one of the largest oil producers in the world is in the middle of a war in Europe and is under sanctions. So this is not an easy time to manage energy markets.
You can say that again. That was Amos Hochstein there, the senior advisor for energy security at the U.S. Department of State from New York City this morning. Good morning. Here's the price action adding to yesterday's really solid gains in the equity market. On the S&P up by around about 0.25% on the S&P. On the NASDAQ 100 up 0.4%. Really strong rally that Max Kettner of HSBC calls wishful thinking.
Wow, what a
this
note.
morning. He does note, and I appreciate this. At the end of the note, he says, where could we be wrong? I have a lot of time for that. And he goes on to say, Tom, if inflation does indeed surprise to the downside or growth stabilizes much more quickly than we thought, then the recent rally in growth over value could continue.
That's where you, at the bottom of research note, you put in your risk factors, and that's well said by Max Kettner. But, John, it's a piercing note from HSBC, and he doesn't mince words. He says you need to be in U.S. dollar cash. Rarely do you see that from a house.
But for this buy anything rally to continue, we need to see further repricing of rate hike expectations and another sharp drop in real yields. But market pricing of risk assets, he goes on to say, Tom, is now very much out of line with our cyclical growth indicators. Tom, I've got a long list of banks now. just pushing back against
Oh, it's
what we've
amazing.
seen
It's
over the last
amazing.
month.
And Bloomberg News features Bernstein and someone else this morning as well on this. Let's get to Washington right now. The heat of the summer is extraordinary, and it is wrapped around the always beautiful and dry heat of Arizona, and that would be Senator Sinema. Jack Fitzpatrick joins now with Bloomberg Government to keep score. Jack, it's really moved away from the news on this Thursday morning, but nevertheless, here we are looking at tax analysis. I go to Richard Rubin in the Wall Street Journal, his wonderful, legendary tax work of the worry of corporate taxes filtering down to mere mortal people. Is that the attention of the senator from Arizona who was so important in this debate?
That has gotten some attention, and the argument, especially from Republicans, that this would raise costs to consumers and not just from companies, that is becoming a more significant talking point. I don't know that I can necessarily confirm that is the primary focus of Senator Sinema. For one thing she had never signed off on in this package is the carried interest measure. If that had to come out, it wouldn't necessarily break down the whole thing. It's not a massive amount of revenue, but she has raised some concerns about exactly who the minimum, the 15% corporate minimum tax rate would apply to, and if there are some changes that might be able to be made on deducting investments for the depreciation of assets. I don't know necessarily that the Joint Committee on Taxation's score on this potentially raising costs for everybody else is the primary focus for her, but I do know, one, it's something Republicans are playing up and that you'll hear about on the campaign trail, and it's making a lot of noise.
Yeah.
Two, Sinema really is the person to watch who's been hesitant about increasing taxes overall on corporations. She's got concerns. It doesn't mean she's going to tank the bill, but she has become the big X factor.
Well, you know, just in the movie of the morning, Greg Valliere published this moments ago and says it's too good to be true. What's the calendar here, Jack? I mean, we're distracted with Bank of England, Jobs Day tomorrow, and the rest of it. Should we be focused on this legislation into the weekend, into the Sunday talk shows?
Yeah, we don't know when they're going to move ahead with the process to get this bill across the floor in the Senate, but it's a matter of days. That's the goal. If they hit a big hurdle with Sinema, it could get bumped back, but they want to do this before they leave. They were supposed to leave for their August recess at the end of this week. Now the conversation is, does it happen over the weekend? Does it happen early next week? But if they can get this through, the Senate's going to try to do it in a matter or so. That's what we're hearing for this bill.
Jack, in the meantime, there is a bipartisan effort on Capitol Hill to pass a bill naming Taiwan a major non-NATO ally, which has been the policy for decades in the United States, but not formalized in this manner. And it's put President Biden in this awkward position where he's pushing back and getting some heat for it. Why is it in his interest to push back at a time of heightening concerns about China and bipartisan agreement that the U.S. needs to take a pretty straight line on this?
Yeah, well, the timing may be an issue. You know, it's a sensitive time with Pelosi's trip to Taiwan. You're right that this would formalize a relationship that already exists between the U.S. And Taiwan. There's other stuff in there, but it doesn't seem to be the point of objection. There are a few $1 billion in security aid that is not unusual for the U.S. to send to Taiwan. And that kind of leaves the issue of timing and the sensitivity of communications with China on Pelosi's trip as the likely main culprit. Chris Murphy, a key senator on this, said he has concerns and there might need to be a rewriting, but really for all intents and purposes right now, the White House has kind of pumped the brakes and at least bumped this back until after the August recess. There was supposed to be a committee vote yesterday. They didn't hold that. So it may be a matter of a delay at the request of the White House, because it's not just a fundamental debate over the U.S.'s relationship with Taiwan. It seems to be more a matter of how that plays publicly at this point in time in the context of Speaker Pelosi's trip.
Jack, just quickly, can you clarify for me at least why a Democratic senator would be against closing the carried interest loophole? What's her justification for that?
I think the biggest the biggest push against it, one, it wouldn't raise a bunch of money. Two, there are arguments relating to the assumption that those fund managers are profitable in any given year. You may hear more from the fund managers themselves on exactly how this would affect them, but there's some argument over who it is unfair to, in also the context of, in a more than $700 billion bill, this is supposed to raise maybe $14 billion. So it is one of the, arguments aside, it may be one of the slightly less important measures in the bill.
Jack, thank you. Jack Fitzpatrick, thank you very much. Tom, it's not really about the money raised. I guess it was always about fairness for this party.
Well,
and this is something that's not going away. And I think this is the frustration that the Democrats have with Senator Sinema, that on something like this, it should be pretty straightforward.
Right. I mean, John, in the ballet of the British elections, Truss and Sunak and that, I wonder how fair translates. What I know in America is, John, when you hear the word fair, all your radar goes up.
I know, but that word's been used a lot over the last year or so.
To be fair.
To be fair.
Yeah.
Futures up, 1/3 of 1% from New York City this morning. Good morning to you all. A Bank of England decision 35 minutes away.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK, have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think that the business is evolving to have much more customization on clients' portfolios, and that's a good thing, but it's a challenge to kind of move into that mode.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question.